Buddy, as you can see, the sun is out. It is shining. Welcome to the latest episode of Derek Invests. I'm your host, Derek Miller. We're going to look at some stocks today. We're going to do some stock breakdowns. We've had a lot of success in the last week. Did a lot of forecasting before earnings last week. We had an accuracy rate of 100%, and we did some stock valuations, just indexes. We didn't make the marks there quite as well, simply because we were evaluating the indexes, and it doesn't matter. We didn't necessarily miss either. We just did not hit our targets. Oil hit our target. Gold hit our target. Overall accuracy of last week was about 87%. And I gave 2 to 3 day forecasts. And I think what I'm going to do is I'm going to stick with weekly forecasts at the moment. We're in summer, so things are moving slower. Most of my forecasts have hit now, only I put a 2 to 3 day kind of marker on them, and they didn't make it. The indexes have hit their marks, but they hit on day 6. Things are moving slower. There's not as much trading activity. Everybody knows we slow down in summer. So I think we're going to hold the forecast, even though we're looking only at 5-minute charts. Ultimately, we're gonna hold these forecasts to about a week. 5 trading days. All right, let's get started. So as you can see, we have some travel stocks, we have some growth stocks, we have some of our leaders, some small and mid caps, and we're going to cover some semiconductors. We're going to take a look at Master that basically tracks Bitcoin. So we'll take a look at that. And all right, let's get rolling, baby. By the way, futures. I've started doing some futures trading as well. Starting to show how to do that, how to keep yourself tight there. If you're interested in that, reach out, let me know. I will happily cover anything people are interested in. So be sure to let me know if you'd like to see some of that future stuff. It's a little quicker. You have to be a little tighter. You should not be jumping into that stuff if you're brand new. I realize there's a lot of leverage, so you don't need nearly as much money to make money. As you can see, I have futures up here. This is TradingView, which I happen to love. I also am really falling in love with NinjaTrader. It is a very, very, very easy. It's not just the charting; it's also the account. The trades are placed so simply. They are on TradingView as well, but I'm starting to utilize NinjaTrader also. I'm liking it thus far. Let's go ahead and start taking a look at some stocks. So the first stock, pardon me while I look down here, I have to look at my stocks. We are going to look at Six Flags, and we're going to look at fun. Let's look at Six Flags. It's on the radar. People are talking about it. I'll cover anything that people are talking about. What do we see here, folks? What do we know about trading activity? What do we like about trading activity? Well, what we specifically like in areas like this and this, after price has fallen from 72 down to 15. So obviously a massive drop. What we like about activity like this, and when we like when it comes back, is that this is most likely purchasing. So let's zoom in on Six Flags. Let's see what we think. 1 week. Here we go. Let's scoot this way and zoom in just a little bit so we can see both of those areas. Okay, these are retests, folks. So they're still finding supply down at this level. You have to be aware of that fact. They're still finding supply down at $19, and we're sitting at 31. Let's zoom in a little more because, again, we're going to do some weekly outlooks. That is important to us to note, but that is not how we are going to decide what to do within this position. Okay, here we go. So what do we see? Buying all along the bottom here. And, we do see significant activity here, which is a new high price. So let's zoom in a little more. 4 hours. What do we see? We see activity at that high price. Now, remember, we're not focused on it, but we know that there was still a lot of supply down at the $19 mark. And look at this trading activity starting right here at $28. Now you're sitting at 31. If you own something at 15 and all of a sudden trading activity kicks in at 28 on a high level, what do you think that is? Correct. Most likely that's selling. Now, this particular position has just hit the news, and remember that it's come from 72, but we definitely are looking here. Every chart is a new chart, right? We we look backwards in time and we break down charts so that we have an idea of where we're at and how we got here. But ultimately, this is the chart we're evaluating. Only this chart every time we get shorter and shorter. This is 15 minutes, and I have to tell you, on a 15-minute chart, you know, what you're seeing here is selling. Selling, selling, selling. How do we know that? Because trading activity this strong, if it were buying, this price would have moved upwards, everybody. Price would have moved upwards. Now, for our target, we're going to zoom back out a little bit so we can see a little more. Okay, our initial target isn't that far below us, but it's going to miss that. It's going to come through that. Let's see. It's a tough one, everybody, because it appears as though it's going to come down to about 30, but I'd say there's an extremely high probability at 29.50. Let's go take a look at the major index real quickly. Let's take a look at the S&P. And then we're going to make our call on Six Flags. Although, honestly, I would avoid it. It's nothing too enticing there. There's nothing that great to look at. BY. Zoom in just a little bit there. There we go. Let's go to a 4 hour. Actually, just straight to a 1 is fine. You have a gap to fill. You have a gap to fill. Yeah, this wants to come to 5. This wants to come to 536.50. It does. I mean, it's been fighting for it. It's summer though. Markets don't tend to fall in the summer months. People are not as active on Wall Street. There's a little gap here to fill. This would be a 7-day outlook. So since I'm here, I'm gonna give a 7-day outlook on SPY. Since we are here. There you go. SPY 536.55. Oh. Let's go ahead and change this to red. There we go. You know what we'll do as well to make sure that everybody knows where we're at? We'll go ahead and slap some dates up. Let's say the 20th or the 19th. Anybody know? Oh my gosh, the 21st. Good Lord. So it'll be what, the 28th? There we go. I know that's a touch tedious, folks, but we want accuracy, right? Doesn't do any good to post this stuff. It doesn't do any good to talk about it if nobody knows when and where you're supposed to hit, right? All right, let's erase that. And let's go back to 6. And we are going to go ahead with Six Flags. And this is a bigger drop, but we're going to go $29.50 on it. Yeah. That's what we're going to do. Same target of the 28th. Here we go. And bingo. All right. And now let's go take a look at fun. And, folks, I want you guys to know something. I do this stuff, and I put myself out there, even on positions that I don't necessarily see great action. And I'll tell you why I do it. Because everything isn't always perfect. You don't always need to place trades. But look, the bottom line is this. If you have a process that works, having an opinion on a position, and this one's going to be a 47. We're doing the same target. We're going to go 47.68 right there. You should be able to have an opinion on anything almost at any given time. Now, if you're asking me, are these two positions that I would feel very excited about? Well, no. I mean, I don't see, to me, there's better stuff out there, but we're covering stocks because, look, people are interested in what these companies are going to do. Otherwise, I wouldn't be looking at them. 6/28, 2024. All right. We're going to cruise through some of these guys. Some of these are not all that difficult to have opinions on, and they move pretty quick, and they're fairly obvious as well. And you should be able to move at a speed similar to this before you would ever even consider something like futures. I mean, you actually need to move much, much faster than this for futures, but you should be able to do evaluations like this. So we're going to look at TXG, and then we're going to look at SMCI and Master. So hang on there. TXG, let's take a look. TXG. Oh, goodness gracious. Okay, let's go in. There are certain stocks, guys, that I won't have an opinion on because they're so new and so torched that they could have been manipulated from day one, or they just don't have anything worth looking at. Like if you look at this particular stock, there's just nothing here. There's nothing standing out. If this were buying at this level, so you see this giant piece of trading activity that took place on May 1st, if this were buying, and what's this level, 28? There's no way you'd be sitting at $20, right? So I don't know what happened here. It says earnings, but I have no idea. I don't personally pay a lot of attention to the fundamentals. I look at the setups. That's why my earnings call were 100% last week. I called every one of those before earnings came out. I was 100% accurate, not just to the upside, but then to the downside. Anybody that just gives you upside in a rising market, you should not listen to, everybody. That's a waste of your time. Anybody that's constantly going to the upside is going to be right 80% of the time. The problem is the 20% of the time that they're wrong, you're giving it all back. That's reality. I don't need a custom interval there, folks. Let's go back to one day. SCMI. This was getting torched for a while. I haven't looked at this in a bit. I know this is a stock everyone's interested in. Or is it SMCI? SMCI. I look at so much, guys, that believe me, while everybody thinks that the stock they're watching is the most important stock in the market, trust me when I tell you that there's just stuff everywhere right now. And everybody's interested to some degree. What you realize about a company like this is that they've gone from $30 to $1,200. Actually, let's just go from the jump off point here. What's this price? Come here, you. On May 1st, it was just call it $100. It was at $100. Then it went to $1,300, in a matter of a year. That's a big move, everyone. For an unproven company, I know why it took off, by the way. It's not a secret. I get it. Daily. Is there anything here worth looking at? 300 to 1,200. No, see, there's nothing here to look at. Anybody that tells you this is something is really in play, this isn't really in play, guys. I hate to be the bearer of bad news. If anything, it'll be sold back down to the 800 or so mark, and then it might actually get some legs and really move downwards. But I'm not making a call on this. I told you I like to make calls on everything, as long as it's not just me just guessing because it's the trendy thing to do, and that's all that is right there. Here's Master. Something tells me this isn't going to be anything I'm going to care to make a call on either. I remember when this thing was up there at 2,000 though, and I called 1,200 on it. That was pretty easy. Doesn't look like there's a heck of a lot of buying down here at 1,000. And you're really just calling Bitcoin. So if someone wanted to know ultimately what I think of Master, I think this. I think ultimately you're back in here, 185. But you want shorter term time frames. Everybody wants a shorter term time frame because they're either looking at options or futures, or they're actively trading, which is something I definitely believe in markets like this. If you're not active, you can get torched. Master, nothing here, guys. Nothing here. I'm going to step away from this one as well. It's filling gaps to the downside. I have to tell you that is not great news for this particular company. Well, it's not really, doesn't matter. It's not good for this position. Let's take a look at Etsy. One month. Let's look. Oh, my goodness. This was a lot of buying right here. And the reason you know that is because it rallied up to 140 from, what's this, 670? So it doubled. But then, look, it comes back down. What's going on now? Nothing. It's par for course. I live on a golf course right now. I use a lot of golfing terminologies. Terminology. Anything here that I like? Daily. Nice gap that filled to the downside, sadly. This is going down, guys. This one will be heading down. To where? Giving you a target the next week is in the next week, it goes to 58. There's a lot of buying in the background here. If you look, that's 1 hour. Go down to a 15-minute. You don't need to look too intricately at things like this, everyone. I mean, a lot of buying here. See, you would assume this is all buying. All of this, even as prices continue to drop. I would say the next week, 64. I'll mark this one. I don't like this gap sitting here because they keep testing for supply, but it looks to me as though this wants to go up. So we're going to go ahead and set a price target in the next week. 610, it's going to work. Market's probably going to be working against it. $62. I would give it 64, but I think the market's going to be working against this one. Again, everything is moving slower, don't get me wrong. But It's tough running against the market, especially a stock like this. It just looks like there is a significant amount of buying that's been going on. And remember, there's always stocks that are going up in markets. This isn't some dramatically falling market either, right? It's just looks like there's just a pullback that's coming. I mean, there is nothing major for 6/28/2024. As you can see, guys, I'm on the buy and sell side at all times. There's no such thing as bearish or bullish to me. There just is, right? A position can move independently. Now, when you're in a massive bear market, this is really dangerous. And just like right now, we're in a pretty strong bull, and I am willing to make calls to the downside right now because there have to be corrections as well. ACMR, take a look. ACMR. Gosh, all right. Everybody seems to be very interested in these new companies, huh? Okay, so we hit here, we bounced. Actually, that's very positive to the upside for this particular company. Gap has filled, another positive sign. Here we sit. There is volume, but it is higher at a higher price. 1 hour. Let's take a look. Volume bubble here, here. Let's go down to 30 minutes. What do we see? Anything? Looks like selling above us. Not crazy, but it's up there. It's above us. 15. Selling. I like that. 5 minute. Gosh, this is a tough one. I'm going to give it 24. This should have 24 to the upside next week. Yeah. Yeah, it should. All right, let's give it 24. ACMR. Let's look at NFYEF. I'm not sure what this is. Someone asked me to look at it, though. I'll take a look, but I don't know what that is. NFYEF. Oh, we're not. This is no volume. Yeah, guys. No. Sorry, I can't take a look at that one. SPHR. Jesus. Yeah, everybody's sending me the new stuff, huh? The new. What's going on with the new, Derek? Let's see. That's buying at this level, but the way it rose just came down is not the greatest of signs. 50. Well, it did double. Yeah, there's more buying in here. take a look. 1 hour. That's not great. Every chart's a new chart, guys. You have to evaluate that way. Here we go. This is something. Let me show you guys. See this? Somebody's buying it. In the next week, you should get 34.16 out of that. SPHR. There we go. What is next here? What are we looking at? ENIC and TTE. I don't know what these are either, guys. ENIC. Let's take a look. Week. Day. There you go. I'm going to go straight down to 30 minutes. Oh, mama. It's just, oh, God. Not enough volume. Yeah, volume's really drying up on this one. TTE, everybody. What do we see? All right, well, we see some standouts down here. Now, price is returning to those levels. I don't know that that's necessarily great. Gaps filling on the way down. This one isn't as bad. Sometimes you want to zoom in, everyone, and just really take a look. Yeah, you'll probably have 62.40. It's real hard to say beyond that. You may have 62.90, but I'll say 62.40 confidently. All right. And then we're doing targets for 628, everybody, next week. All right, let's see. What else did we say we were going to look at? MGM and RCL and Apple. Where are we at here as far as time goes? Oh, we're okay. We're all right. MGM, RCL, and Apple. MGM, let's take a look. Monthly. I like that down there. It's risen quite a bit since. Really just stuck in a range, huh? Weekly, daily. Let's take a look. What is this? Looks like a lot of buying. It really came down underneath it. That looks like a buy. That looks like a buy. That's at 38.39. 4 hours. If the wind was at its back, this would have a 46 by next Friday, but I don't think the wind is at its back. 1 hour. Let's go to 30 minutes. Every chart's a new chart. This is buying down here. There's just nothing substantial here. Definitely a search for supply. Up is its future for sure. But if we're looking at the next 5 trading days, which in slow trading times like summer, 5 trading days is the equivalent of like 2 in the fall. Yeah, I'm not calling this one. There's just not enough here. RCL, there's just not enough. You need a little something in times like this to have any level of accuracy, and that just doesn't have it. I mean, this is obviously a tremendous amount of buying. This is a search for supply. Up is clearly the route for Royal Caribbean for quite a while. On a daily, let's see, buying. Okay, they came back. That's a retest for supply. Royal Caribbean has a lot of buying going on. I can tell you that. It likes to fill gaps though, and there is one back here. Oh wow, that's pretty far below. Sadly, it will fill, guys. Believe me, it will fill. This should have pushed price down if it was selling, but it didn't because it's buying. You can forget the red and green bar stuff. Looks cute, doesn't mean anything. Red bars are as much buying as green bars are selling. This is buying right here. Boom, boom, boom. You're looking at 153.50 over the next week, I think. Let's zoom in. Yeah. RCL 153.50. There we go. Let's put our target date up there. So that later, it's not in debate on when I said these things would happen. All right. And I believe that is going to be all for today. Let me do one more. One more. Let's do NVIDIA. Everybody loves NVIDIA. All right, NVIDIA fans. You're at 130. 129.50. Everybody always asks me, why don't I just do a regular screenshot, like a whole screenshot, and then I can edit it later? Why would I want to do that? I don't want to edit it later. I feel like I've been a little more quiet today for some reason. Well, I guess it's Friday, end of the week. We're back here, though, everybody. We're back. Oh, the sun went completely out of... I am dark, huh? Anyway, hey, listen, thank you, everybody, for joining me today. Remember, if you're not okay up here, you're not okay anywhere. Mental health is the most important part of your day and of your life, right? You have to stay positive. We all have negative thoughts leak in. Just don't let them overtake, right? All right. So thank you all so much for joining me. I really appreciate it. Put a smile on today if you need to. Fake it till you make it, right? Like, you can always do that. Sorry about the fact that I am undercover here. I guess it's going to be time for me to switch positions yet again. All right. Thank you so much for joining me. If you need someone to talk to, always reach out to me. Okay. I will. I'll see you all soon. I will talk to you tomorrow. Hello, everyone, and welcome to this episode of Derek Invest. I'm your host, Derek Miller. What I'm going to talk about this week is there's a bunch of companies that are having earnings. You'll see them listed down here. We're only going to look at a couple of those. There's really not that much to look at there. I think we're going to take a look at Nike. We're going to take a look at Micron, but there's not really a lot there. I've listed them all, but I don't want you to get the wrong idea. A lot of those are just not in action. So to spice it up and actually make it a little more exciting than just those earnings, the companies producing earnings, we're going to look over some volatility stocks. We're going to look over some stocks that have really high short interest. We're going to look over some stocks that seem to be way oversold according to the 14-day moving average, some stocks that are way overbought according to the 14-day moving average, and one particular company that has really, really high option volume right now. So definitely in play. Let's get started now. I want you all to know I'm going to do I'm going to start teaching futures. I'm going to start educating people on futures. We're not just going to jump into futures, though, where you don't know anything, and I'm moving at the speed of light because that's how fast futures move. I'm going to start teaching you how to look at those charts in a slower time frame and build you into how actually to become a futures trader. The things you need to look at when you're actually trading futures, because believe it or not, you can set levels and walk away. I know a lot of people tell you can't. Yeah, you can. You really, truly can. Now, it's a high leverage environment. It's a fast environment. So these are things that we have to take note of. And that's why with my one-on-one students, I always create their investment plan first that covers risk management, cash management and investment management, because once you can change what you want. Okay, sorry, it looks like we lost connection, but it does look like we're back. So let's get started. Let's first look at Micron. Okay, take a look at Micron here. All right, MU. All right, so what we see with MU, I'm already on a 15-minute. Let me back out. Let's do a full analysis so you can see. So what we see with MU is obviously it has gone parabolic from, 100 to 160 very, very quickly. Let's go to a weekly. All right, so automatically on a weekly chart, you say, hey, look, it needs to obviously come back and retest this high, right? So we can see that over the long term, 100's in play. It has to be, okay? We're going to eliminate that, and then we're going to move on to a daily. What does a daily tell us? We move on to our daily chart. It looks like we have a rather large gap here. This is at 102. Isn't it funny how that matched up? Where it took off, there's a large gap where it clearly looks like it needs to be revisited. Now we're also seeing a lot of volume over here at the high price we sit at right now. Okay. Now remember that this position is announcing earnings this week. So we really want to zoom in on this thing because we're still looking out daily. This is 12 to 18 months, folks. That's 12 to 18 months. Or it can be much quicker if momentum picks up. But when you look at a daily chart, you should be thinking, okay, this is 12 to 18 months from now. We're on a 4-hour chart. I'm sorry. So what's a 4-hour chart? It's probably not too far off from the 4 months that I said there initially. You 6 months you're looking at, right? You're looking at 3 to 6 months. Momentum can pick up very, very quickly. As you can see, this gap up here at the high, it did fill on this 4-hour chart. That's a good thing. Gaps to highs, though, that fill is typically trend reversal. So you're looking right now going, hey, having seen that, now you're saying to yourself, is that a trend reversal? High volume at the high. High volume at the high. This is high volume after a gap down that looks like it's filled. So look at this. We had a gap up that is filled, right? You got the smallest bounce. Then it gaps down. That fills, and it looks like it is reversing. It's reversing on that gap. So we're starting to think, okay, the trend is actually looking down. So we need to be looking below us. We have an area here at, let's call that 136. All right, we are on a 30-minute chart. High volume. You do have high volume, which created a pretty significant bounce. I mean, from 135 to, what is that? High of 142.59 Friday in one day. Yeah, that matters, right? That matters. That's 3% move. Comes back up to test that high and pulls down. That matters as well. 15-minute chart. What do we see? Okay, did the gap fill? The gap did in fact fill, guys. So the gap is filled. Now we're seeing high volume at that gap price. We're looking down. What's below us? Probably about right here, right? So yeah, back down to that 135.5 mark. Go to a 5-minute chart. Now, when I look at this 5-minute chart, I'm looking for several things, okay? So I'm seeing a lot of volume in the background. What do I mean? There's a lot of trading activity. All volume means is there's a lot of trading activity, everybody. It simply means there's a high level, hey, trading view. Of course I didn't log in. I never do. $12.95 a month, $24.95 a month, and $49.95 a month. I always appreciate the fact that TradingView allows you to use the service when you're not even logged in. I don't do any live trading through TradingView at the moment, so I don't need to be logged in. I like teaching from here because I think it is very easy to utilize for education. I'll talk about the rest another time. But so here we see a lot of volume in the background, and we see prices driving down. Now there's a lot of volume here, and prices rose, all right? Then at those same levels, there's a lot of volume, but it's at the high. So if we can zoom in on this just a bit more, I think we could go to 2 minutes, right? Or maybe it's 3 minutes. If we zoom in just a bit more, now look, remember, every chart is a new chart, okay? So now we rally, we lose complete interest in the price. There's definitely selling interest in the price here because price falls. Now here's your volume drying up. In Micron, there's not a lot of volume left. Let's zoom into the 1. A lot of volume. There's some volume that creates a pop. This looks like it's going to have downward pressure. Now, how much downward pressure is there going to be before here? Let's clear these drawings. How much downward pressure can there possibly be during earnings season? So we're at 15 minutes. How far can this go? What is a target for this thing? As you can see, I'm having to zoom out significantly because everything is filled. Now, a gap up and then a gap fill, if this rallied in price, would look really good. But it dropped. So what I'm going to say is this is a search for supply and they found some. I'm going to say this is a search for supply and they found some. So what we're now looking for is the upside, guys. What we want to know is what's the upside on this particular stock on earnings. You see, that's selling, buying. Doesn't look like there's a lot of supply down there. So I would say you're looking to the upside on this thing. You're probably looking right up here. You're probably, well, let's take it to right there. Let's call 147.89. So we can call this coming into earnings, which is, I have it written down. What is it, Thursday? I'll look. We're probably looking at 148. So let's get this done. MU 148. Today is what, the 24th? I do that pretty consistently, folks. I'll hit that. That rectangle is right there all the time. So this is today's date. And let's take a look at our target date because I honestly don't remember. Where is it here? What day do they announce? They announce Micron is on Wednesday, June 26th. There we go. That is that. I'm going to save this one. We're going to take a look at Nike too for earnings. It's just the other companies that are having earnings just don't have a lot of excitement to them. There's just not a lot to look at. There's not a lot to say. Even this, I'm really pressing to make something of this, guys. I want you to know that. This is not something I would probably play. You know, it just, I can see where it's going over a longer term time frame, which I like that. Don't give me, look, I trade half of everything I do is long term, not short term. Nike looks really similar. You have this giant gap up here at 120. Does this need to fill? It looks like it's building momentum too. Let's back out. We always do things the right way, don't we? We were back out to our monthly. So Nike was at 180. It has some volume down here, nothing substantial at this 80 mark, 82, whatever that is, 1 week. Now, in this base, high volume, that's at a low price. This is high volume at a high price. This is probably buying. A lot of this is covering, selling. I would say you're looking at buying in here, buying again. You're looking at selling here. You're looking at buying here because prices rallied. So I would say there's probably more buying at these low prices in this range than there is selling. So I'd be looking at the upside at the moment. You bring it in, you can see why there was buying because there's a big gap right there. There's a gap from, what is this, 87 up to whatever this is, 97. That's pretty big. I mean, look, it's 12%. So it has filled that gap. It's a gap down that never filled. We're coming into earnings. Does it look like something's in play there? Outside of this little gap here so far, I would say, not incredibly. I want to look at Nike because I like Nike, and here you are. You're at a top. You're at an incredible level of resistance. Incredible level of resistance. You're at earnings call, which earnings are always a great way to move price. What do we see up here? A lot of volume. Is there a lot of volume up here? It's drying up. Yeah, I mean, you can see a lot of volume here at the lows, but there's a lot of volume at this high. I believe, when's Nike? Nike's Thursday, huh? I'm trying to give you something here. I know this is something people are playing. Building. I have to tell you. Building. Yeah, this is looking like it's to the downside. Where is it going to come to? Again, I'm pushing it here. I really am. Nothing. I'm not even commenting on this. Can't. Simply can't. There's just not enough here. If anything I say is just me, I mean, I know what I would do with this long term. There's not even a doubt about what I would do this thing. Like long term, this is a piece of cake. I'm playing this to the upside. All the way up here, I am. Let's go back to the weekly. Let me see. I know that it's really come off. Yeah. I'm playing this to 120. I mean, I just would be. Yeah. My first stop would be right here. 116. In fact, I'll say that. I mean, I have no problem with that. I'm not gonna call it for earnings is all. NKE 116. Oh, 116. We are at June 24th, 2024. We're going to say target date. What are we? We're in June. So just say 12/1/2024. All right, let's get into some of these volatility stocks. They're going to be more fun. This was not very fun. I mean, it's not very fun. I mean, it's always educational. You learn something, which is great. You can go through these stocks. Like I tell everybody, I believe in a 50-50 mix, no matter how well you do, unless it's what you do professionally. And that is because a professional can go in and pull out. I mean, some of these derivatives guys can pull out 20% a day. And they're pretty insane. 10% a day, 5% a day, whatever it is. But you don't even have to shoot for that. If you paid attention to my most recent video, you realize that most of that is just not even necessary. Okay, let's take a look at options trading volume that's through the roof, okay? This is Barnes & Noble. Oh, there it is. Barnes & Noble Education. Options volume here is insane. Look at this. That's insane. That's so funny. Oh, my goodness gracious. The volume's so low on this, I don't know that I care. Oh, my gosh. This just popped up on my options volume screen, and I thought, let's take a look at it. But I have to tell you, we're not going to look at this. This is insanity. Hey, look, some people like gambling with their money. Like, they're gamblers. That's what they do, right? I look for things that have a much better – I look for things that are actually definable, right? I always want to define risk. If I'm not defining risk, I'm not interested. So these are overbought, right? So a lot of these are saying they're overbought. Now, that doesn't mean they're overbought. What that means is on the 14-day relative strength index, they're overbought. That does not actually mean they're overbought, but you can see why this happened, right? Look at that. Now, what are we going to do with this one? Oh, my goodness gracious. Oh, my. I mean, from a long-term perspective, guys, what are we doing with this? We're shorting it. We're applying a long-term short. So first, let's just say this. Because there's no way you're not taking this. If you don't take this, I don't know what's wrong with you if you don't take this. You're taking this over the next 12. This is a 12-month outlook. INSM. You're looking at $32. It is 6/24/2024. It's a long-term play, so you're going out. Target date 6/24/2025. This is something for long-term money. Oh, and I got to go through and correct all this. That's okay. I should have done it out the gate. I know better. But that is all right. Hey, I'm not perfect. You know what I mean? Let's see here. There we go. That looks good for now. Let's just take a picture of that. This is long term. We're going to zoom in, though, guys. I mean, this thing's in play, right? Let's zoom in. I love having long-term ups and downs. Like, I love looking at things that have downside and upside, because anybody that is in a rising trend market that's giving you upside targets all day, well, any idiot can do that. In a rising trend, of course you're looking to the upside. Hello. But it's important to know where your downside is. We're going to have to come in tighter than this. All right. Let's take a look. So what you're seeing, oh my, yeah. So now you are seeing volume coming in at these high levels. I mean, this is 65. What's this? This is 62. This is the all-time. This is like the all-time high right here. So what are we going to do in the near future? Well, bare minimum, by the end of the week, you're looking here, right? Zoom in. Yeah, you're looking at 67.50 by Wednesday. '24, 2024. And so our target date is the 26th. Whoop. There you go. Boop. There you go. Let's go back to a daily, a monthly. Who's next? We're going to do overbought again. WalkMe, WKME. What's going on with WalkMe? My goodness, look at that. Straight into a daily. How insanely overbought is it? And you're sitting at the highs there, yes? Come into 4 hours. What it did, hit the base, it rejected it. Lot of volume. 750 to 950. Boy, this thing really moved, huh? This thing really moved on earnings, too. 1 hour. Oh, wow. That's what earnings can do. Let's take a look. Let's keep going. You have to remember this thing has come in, from 750. I mean, it's doubled so quickly. So let's get to a 30-minute. What's the price? What's the variable up here? It's not moving. Lot of volume initially. So lightly traded, though. Yeah, too lightly traded to play. Sorry, guys. Can't play that one. DIH Holdings, DHAI. Yeah, it's when something's too thinly traded, it's too easily manipulated. I just don't, I don't care. This is brand new, so I'm not gonna step into this either. There's no volume. I mean, you're looking at monthly volume of 1 million, 300,000, 200,000, 88,000. Like, we can't. I'm not interested. DLO. This is oversold, everybody. Let's take a look at some oversold stuff. That's got sold off pretty bad, huh? Woo, baby. My goodness. All right. One day. You really do need to get back up there. Based on earnings. I told you, I mean, earnings are used very, very consistently to dump or buy stock. Now, what you can see down here is the same thing. They're selling it off clearly. Let's keep zooming in. I mean, there's not a ton of volume here, but it can be enough. But there's no indication that anybody's picking this up yet. So it looks like it's just going to keep selling. I hate to be the bearer of bad news here, but if this were actually buying up here at 950, you wouldn't be at 730. That's more selling. This thing's, yeah, sorry, nothing here. This just looks like it's going to keep getting sold. ZNTL. Move into a weekly. Zentalis Pharmaceuticals, like infamous for crazy price moves and manipulation. It just is. It's not a judgment, it's a fact. Oh gosh, there's not enough trading here. Too easily manipulated, but this came down to what, 6 from here to 8. I mean, there's not a ton of volume here. I'm going to take a picture of this. Let's zoom in a little more. Tons down here. 438. I mean, you have a great risk reward here. I mean, look, you should see this again. ZNTL of what I say, 630. What's the target date here, guys? What do you think? Summertime. You have to realize that. This stuff, I mean, this can take a month, and that's when I'm going out. It can take a month. It's summer. Look, I think it's a humorous thing that summertime is a time that really does kind of slow down. But look, when you're a parent, you just go, yeah, I get it. Kids are home from school. Let me just be real clear about what this is first. This is an up. All right, let's take a picture of that. Okay, let's see. SRG, shorter sky. You know what? Let's okay, SRG. It's yeah. We'll look at it. We'll look at it. Still sky Phantom. Yeah, okay. Let's get rid of this. I want to see short interest to sky high. Let's take a look at SRG real quick. I just want to look. It's properties. SRG. Let's just see. Yeah, sorry, there's not enough volume here for me to. Well, let's jump into daily. Yeah, it's being sold though. Something's gonna have to happen. Someone's really gonna have to step in and buy. When's this? It's just more selling. There's just nothing to look at. I want to look at short interest to sky high. I want to look at Fathom Pharmaceuticals, PHAT, Fathom, P-A-FAT. I definitely want to look at this. Short interest is sky high. Everyone's shorting this. That means it has the most potential for upside based on very little. Because what drives the market more than anything else? Short covering. You got it. Is that what's going on here? Ooh, I don't think so. They could pop it based on the short interest alone, but I can tell you this thing's been rejected. Heading into next week's action. We're going to look at this one again later. Not this week. We'll look at this over the weekend. Because if they suck it down into the bottom of this range, then yeah, they're gonna trounce some people. If not, that might not be the case. TR. Oh, Jiminy's. Oh, good. We're out. No, we're out of here. That's nothing. Let's take a look at the general market. Let's take a look at the NASDAQ. We'll do a quick evaluation of the NASDAQ while we're here. Let's see what we think. Let's jump back. We always zoom out. I don't need to go to monthly. I know we're not dealing with any level of economic event right now. Seasonality, volume's very normal. It has fallen off pretty significantly from where it was, which I wouldn't necessarily go so far as to say that that's normal seasonally. And last week was not a good week. That's a fact. Let's look at the daily here. Yeah, volume had picked up to the downside. You got 450 sitting right here, waiting for you. I have some lower targets in mind. Everybody knows that. But, you know, I think as we zoom in on this, let's get to an hour. So we're at 468. I think I called this last week anyway. What's the 30 minutes say? 30 minutes says it's selling. That's what it says. Let's go into a 15. And the reason you want to know this, guys, especially if you're in futures, you have to absolutely have like at least a 5-day outlook. If I don't care if you don't play it for 5 days. I don't care if you play it tick by tick. You need to know where the pressure is at. Where is the pressure? Is the pressure on the downside or the upside? If the pressure is to the downside, at least you have a bias. So you don't get sucked in, because the one thing about doing futures, everybody, is you will get sucked into a 1-minute chart as if that's reality. It is reality in the moment, but the fact of the matter is, if you know you have a downside bias, you won't get caught with your pants down quite as easily. So if you were looking at this from a future standpoint, where do you think your first stops are going to be? Well, this is an interesting one right here because it already happened. All right. But the reality is what you're looking at here, and I have zero problem saying this. You're over the next month, that's where you're looking. So you're looking at QQQ. Just call 468. Yeah. 468. Okay. You have on, 6/24/2024. The target date is 7/24. Even let's just say 7/31. Doesn't matter. 2024. It's still a ballsy call. We're in an uptrending market, and I'm calling to the downside. And I don't even know that it's ballsy as much as it's just accurate, and people won't like it. They'll like to ignore it. In an uptrending market, finding guys that will actually look to the downside, difficult. Why? Because it's real easy to be wrong. It's so easy to be wrong over the next month. It's unbelievable. Now, do I think I am? No, because I wouldn't post this if I thought I was wrong. My accuracy level's pretty darn high, long-term and short-term. There's a reason for that. I use a methodology that isn't based on what the hottest trend is. It's something that's been done for 100 years. It's how a market moves. All right, guys, I think that is enough market coverage for today. I am going to do my first free. I'm going to make it free. I'm going to do an intro to options trading, and how to actually break down a chart, or for futures. Intro to futures. I'm going to show you how to break down a chart, and then how you speed that up if you're looking at futures. And just to show you, like, I have futures going right now in an account where I can set some levels, and I'm actually practicing because I'm using the Dow. The Dow is actually $5 a tick, which is, for a new guy, for someone who's new, it's really important, because trying to play $50 and $500 a tick, you'll get hurt pretty darn fast. But when you're looking at the Dow and you do the minis, you can do $5. So yeah, you want to. That's why I'm choosing to use that anyway. All right, so I am going to jump off now. Let me just close up by saying that if you're not good up here, you're not good anywhere. Mind your mental health, everybody, right? If you're having a bad day, get out there and smile, get in the sunshine, do a little exercise, fake it till you make it. Throw in a smile, fake it till you make it. It works. If you don't have anyone to talk to, you can talk to me. I'll listen. My contact information is right here. There's my Twitter handle. There is my LinkedIn. My email, if you should need me. I do one-on-ones, and the real focus on the one-on-ones is to teach you how to actually invest and trade properly. But really, it's to set up, what most people don't realize is, to set up a proper financial and investment plan. You have to do that one-on-one, because you have to cover the 3 pillars of investing in financial planning, which is investment management, risk management, and cash management. And that is very personal to everybody. And it doesn't have to take the time you think it does. So if you're interested, reach out to me. Other than that, it's been great. I'm going to set up an event either for tomorrow or Wednesday to do a free futures educational class. Hopefully I see a bunch of you there. I should. And if I don't have enough people sign up, I just won't do it. But I hope that I do, and I'm happy to do it for you. And this is going to be a way for you to actually get your feet wet, get your foot in the door, have someone explain things to you in a manner and that is slow enough where you know what's going on. Watching these guys trade live, I know if you're new, you have no idea what they're talking about. And some of those guys have no idea what they're talking about. But aside from that, that class will be very, very, very valuable, whether you trade futures or not, because again, this all translates. If you can do it on a monthly chart, you can do it on a futures chart. Tighter risk, much, much faster, and you have to switch levels very quickly. On a monthly chart, a weekly chart, a daily chart, you have time to make your adjustments. It's just time and speed. So I'm going to teach you how to read those charts. Thank you, everyone, for tuning in, and I will see you tomorrow. Good morning, everybody. So RIVN was up almost 50% yesterday in after-hours trading. A $5 billion investment. So they're sort of abandoning the Tesla model, which is vertical integration, and they're going their own way. So apparently people like that. So I thought this was a great day for us to take a look at the top 10 electrical vehicle companies, makers, manufacturers right now, and see what we think of the stocks. Is this Rivian thing going to carry over? What's Tesla look like? Before Tesla, what was it? 2 weeks ago, I told you guys sell Tesla at the open at 188, buy it back at 177, and then watch it run to over 200. I still think that holds true, but we're going to go ahead and take a look at it anyway. We're going to look at Rivian. We're going to look at NIO. We're going to look at the top 10 car makers, all right? Electric vehicle manufacturers, producers, whatever the heck you want to call them. So we're going to break down those charts. Let's go ahead and get into it. No reason to delay. I'll break down, as usual, kind of the way I do this is the first couple of charts I'm going to break down a little bit slower. So for those of you that are tuning in for the first time, you can have a better idea of what we're doing, because this is all about teaching you. This is all about education. So you know how to do this for yourself. However, don't just jump in here, guys. I mean, look, if you haven't properly set up your investment plan comprised of risk management, cash management, and investment management, you haven't done that one-on-one with somebody that is a master at this, that is a professional at this, you need to do that. You need to do it, because without it, you don't really know what your parameters are. You don't know how much risk you can take, how much cash you like to have on hand or need to have on hand. Some people get in early. Some people get out late. Some people get out early and get in late. When it comes to investing / trading, which are very interchangeable words, you're just really, people use those words as though they're different when they're just different time frames. Remember, when you're investing or trading, it is all very personal. You will make your mistakes. You're not going to make the mistakes of others, just like you're not going to capitalize the way someone else does. So if you're not doing that, reach out to me. I'll have my contact information up at the end of this. Let's get moving. Tesla. All right. So we saw the run up on a monthly chart. Nothing has changed there. I don't want to go over Tesla, because if you want to find that, you can find that on my live just from a couple of weeks ago, where I actually gave you those price targets. So let's see where we're at now. Anything look good on the weekly? Yeah, I would say this looks good on the weekly, right? This looks like a lot of here. Why does it look like buying, folks? Because price has done what? Sorry, I'm outside. I got these mosquitoes that love to come get me. Price has fallen, and then all of a sudden, what do you see? Large amounts of trading activity. Large amounts of trading activity after a price drop is going to be buying. It's going to be institutional buying, because this stands out. This level of volume here, right here, like look at these two bars right here. I mean, I don't know how much higher above everything else it is. It's heads and tails. Look at that. All right. And it's sitting there at what, your 165 level, 167 level. So that's where the purchasing happened. Now it comes down to retest those levels, as it always does. We discuss this over and over and over. Now, where does volume end up? Volume ends up much lower. Would you say that this is average volume or above average volume? I would still say that's above average volume. I would say your average volume probably sits down here. Okay. I would say that is your average volume for a weekly chart on Tesla. So you're still above average volume, which means they found supply. They found more stock to purchase. Institutions found more stock to purchase. All right. So let's move on to the daily chart. So right now you have to be thinking of the upside. You're at 187. We know a lot of the purchasing is going on between 140 and 165. Let's move into the daily. Daily, we had a gap down. Interesting. Gap filled. But it looks like, what do we have there? We have another gap sitting down here that hasn't filled. Now, do gaps on this company like to fill? I'm going to go ahead and argue yes, because they do. They fill. So you do have something pretty interesting down here now. Now, does this need to fill because of where it's at, because of where this low is? Not necessarily. I mean, you're talking about 135, 137. So does it necessarily need to fill? No, but it's definitely something to take note of if you see some downward pressure, because as you can see, this was downward pressure, immense downward pressure. Who do you think made that trading activity happen right there on this daily bar? Who do you think did that? I think it's pretty simple to tell who did that. That was institutions. They sold from 200 and it pushed price down pretty low. It got you back down to your 165 level, right? So nearly 20% drop. But then some buyers stepped in here. All right, let's move on, because we've done Tesla's chart. This is for right now. We're going over this again so that you know what we're looking at and why we're looking at it. We're going to take a look at RIVN. Although it's going to have such a pop today, you're really going to have to hold off on price targets. But any giant gap like you're going to see today, there's going to be a lot of people entering shorts on RIVN. And then there's going to be a lot of retail investors that are going and buying it because they think that it popped out to a new price. You pop to a new price based on news, even though it's a $5 billion investment, which is a lot of cash flow. And as you know, I definitely believe in monitoring cash flow with companies. Cash in and out. Now, cash in and out of a company and cash in and out of a stock position are two different things. So for me personally, look at all that buying back there. Look at all that buying. That was exactly why I told you to buy at 177. All right, this is exactly why, because that's where the purchasing's happening now. 175 to 180 is just monstrous amounts of purchasing. It drops, so there's less supply. So this thing's going to run. Like I said, Tesla goes to over 200. We can go ahead and throw that up here. Why not? We're going to change the colors back. Tesla 200 plus. Let's change this now. Then we're going to go on to RIVN. We're going to take a look at RIVN and see what's going on there. Beautiful. All right. So today is what? 6/26. Price target. There we go. What do you guys want to look at next? I guarantee it's RIVN. Let's take a look at RIVN next. We already know what pre-market's going to look like. It's going to look wild. It's going to be up 50%. I mean, or at least that's where it was yesterday. After hours, it was up 50. We'll take a look. So let's go to RIVN because I know everyone will see it. RIVN. RIVN. And I'm going to we're going to cruise a bit through some of these. Specifically RIVN because it's up. Okay, so they're showing the market up 38%. Let's go to weekly. It's a new company. We can actually skip straight to daily. RIVN will have a okay. There's it's funny. I would have said a $15 price target immediately. It's at 1650. I'll tell you right now, guys. If this is me, if this is me, oh, that's a lot of selling. That's a lot of selling. So you have a ton of selling in the $20 area. You have a ton of selling. Oh yeah, it's the $20 to $22. I'm selling this at the open. Let's go check out how quickly. It can take a little bit though. 15. That's a 10% run up. 5 minute. Yeah, they ran this from what? I'm shorting at the open. No, zero question about it. The show on the 1 hour. No, it's still not far enough. You go on the daily. Yep. I have no problem rating that. 6/26, 2024. Oops, let's go back to this. Okay. All right. VN. Short. Scale to $2. What I'm saying there is I'm going to short at the open. Okay. And then target $12. That's a little bit of a shorter time frame. I mean, usually I would go out a year, but I'm going to go ahead and stick with that anyway. There we go. That's what I say about RIVN. All right. Take that picture there. Actually, yeah. What else do we got? So let's go through. We got a bunch of other EV makers. Let's see what they're doing right now. Let's erase this, remove. Let's go to a monthly. Here we go. Let's take a look. So we have NIO, N-I-O. Maybe it's NIO, whatever. Amazing how that craze that went on with Tesla sucked everything in with it, huh? Think about that, everybody, when you're looking at AI right now. Just think about what one company can do to an industry. Do we see anything cool here? Well, I would say there's some cool volume back here, and here. Let's zoom in. Doesn't look like pre-market's giving it a lot of upside to go with the RIVN upside. Is there anything to pay attention to? Yes. I would give this a target. Let's see if it sticks. Any volume there? No, particularly. Plenty of volume here, though. This isn't like a volumes at the high, low, 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 low. Okay. Anything on the 5-minute that will give us a nice target? I would say let's see, your 440 is 470 worth mentioning, 475. I mean, you're at 35 cents. You're almost 10%. I mean, I would give that over the next month. Say 470. NIO. 470. Let's change those colors back to blue. Fun doing that, huh? Well, you don't want it to be deceiving. You're showing red. Everybody's thinking down when you're calling it to the upside. So let's take a look at that. And then this is 626, 2024. Let's say target 470. Oh, we already know that. Target date. Oh, we're on a 15-minute. It's summertime. Give it a month. Not even. We're gonna have give it just next week. You know why? Because it's there. You know what? No, I'm gonna push it out one more. It's summer. It's trading is so light. I'm gonna give another week to get there. There we go. There's NIO. Or Neo. I don't know how you pronounce it. Feels like the sun is about to come up here, which I love in the morning. I don't think it'll affect you guys too much right now because you're not really looking at me. Let's see. Let's do XPEV. XPEV. We're going to move quick and just see if there's anything here worth noting. As you can see, when one big giant company moves in industry, the entire industry moves. So there's a ton of buying down here at 750. That's worth noting on the weekly. All right. Let's zoom into the daily. Anything worth noting? Massive amount of selling up here above $10. So this is like 1050. Massive amount of selling. That's on a daily. Let's go to a 4-hour. Lot of volume down here. Then volume dries up. Why? Well, it looks like there's a lack of supply. That's why. Supply meaning I believe this company is being accumulated by somebody. Count fills. Volume doesn't look so pretty now, though, does it? That does. Yeah. I like that. Let's go down to a 5. Is there anything here that tells us we're going to get a boost? No, there's not. If anything, there's something here that tells us this is going to have a slight fall. So we're going to move on. What's next? We're going to look at LI. Oof. Well, this is just about as choppy as it gets, isn't it? You don't play ranges like this. In fact, I would almost say this is a trader's paradise. That's the truth. Let's see what happens here. Look, sometimes a trader's paradise is what you're looking for, right? I hope some of you are following in the footsteps of maximizing tax benefits by realizing that you should be doing long-term and short-term. You need a combo of both. You're not optimizing your financial situation by being 100% short-term, that's for sure. Wow, look at that. That is a monster that goes up to about 24.84. Is there anything that tells me that something's going to shove it there anytime soon? No, there's not. I like this, but this will carry you to here, 1913 or so. This one isn't worth writing home about. There's just nothing immediate. See, the gap filled on monster buy volume. And now you have one down here. I mean, if anything, I'd say this has downside. In fact, you know what? No, we're going to leave it. We're going to leave it. You need to remember when you're doing this, especially if you're new at this. The number one rule in trading, guys, is do not go against your underlying index, okay? Meaning, if you have a major market trend to the upside, which is very, very fair to say that we do right now, and I'm talking about tailwinds to this particular industry as well, with RIVN just receiving $5 billion and being up 37% pre-market. I mean, look at this little Lucid is up 6% pre-market. It's a non-existent stock. I mean, Lucid's been around forever. They have changed what they do so many times I can't even keep track any longer. Do they even do anything? I'm not sure. I know this is supposed to be Lucid Auto Group, the electric vehicle maker, but I remember when they were doing chips or something. They go away and come back so often. I'm not sure if it's a real company. I have no idea. This was 20 years ago I'm talking about, folks. That's how long I've been looking at this stuff. That's how long I've been doing this. Okay, let's take a look at Fisker. They were just in the news for something. I can't remember. Oh, mama, what the heck? Oh, yeah, it's because they disappeared for a long time, effectively. Let's go to weekly. Oh, they don't trade? Yeah, we're out of here. So that's obviously useless. NKLA. Let's see if we got anything here. Oh my goodness. Well, let's see what that's about. Massive amounts of volume. We got to zoom in with this. As you can see, charts get blown out when you have a position like this back here. When you have something that goes from nothing, effectively 300 to 2,800, 2,900, you have to really zoom in because that has to get off the screen before you can properly evaluate anything. So you would say that a lot of this is buying, but that's up at 20. Now you're down at 10. Let's see if anything's stepping in. Yeah, it looks like somebody's stepping in there, but this is definitely all selling in the background. I tell you, that's a lot of selling in the background. Let's zoom in even more. We're on a 1 hour. Oh, I like that $14 mark, 14.36. Oh, all right. Well, this is going from what? High of call 13. Yeah, fool boy, it's taking a bath though, huh? Sometimes that's exactly what's meant to happen though. You have to watch. Okay, I like that markup there. Let's keep zooming in and see if we think we're going to get to 14 anytime soon here. So you would think this is all to the downside, but after a stock has been hit this hard for this long, you know, they say do not catch falling knives. I'm not here to disagree with that. I think that makes a lot of sense. But this is really a 10.50 where this really started taking place. This is really a 10 where this started taking place. Hasn't fallen that much since then. You know what? This is a 5-minute chart. We'll give this thing 12.50 in the next month. 100% we will. Let's do it. NKLA 12.50. Huh. It's all right. That's why I like doing this stuff. I will find things that I never look at. I don't really care much for stock sorters. They will just give you information that's already taken place. You have to find things before they happen, folks. Going through sorters. What's exceeded volume this? What's done this? What's done this? You're looking at stuff that's already happened. Target date. Let's give it 7/26, 2024. I'm only saying it's going to take that long because it's summer. If this was an active time of year, if this were the fall, for example, this wouldn't take you a week. This is not, yeah, 5 trading days you'd be there. You'd probably be higher than this in 5 trading days. That's the truth. That's a 35% run, folks. That is no joke. All right, let's do that. I like walking you through this. I'm certain that there's not a lot of people that spend the time to go through this completely every day with me, but I like walking you through this because this is not, look, you can go get some analyst opinion that's going to just, well, that'll just be complete garbage, but there's a lot of people that will give you actual opinions anytime you want them. Oh, here's where it's going. There's where it's going. They're just, look, this is support. This is resistance. If you're looking for that stuff, my goodness. I feel bad for you. Oh, God. Can you? GOEV. You don't look like you're too healthy, buddy. Let's check this out. Oh, goodness. Sometimes I see this stuff and it's funny to me. It's funny because of how regulated certain things in this world are, and then other things. I mean, you look at a stock like this and I'm sorry, this is just the most obvious thing in the world. The design just built around getting the people that brought this company public rich. It's funny almost. Like that anyone, don't ever be involved in anything like this. Never touch garbage like this. This is disgusting. I think I broke down the NASDAQ yesterday. Did I not? Let's see. Has anything with small caps changed? Let's take a quick look since we're here. Let me see where we're at. I try to keep us at 30 minutes as much as I can. Yeah, we're at 27 already. I'm going to break down small and mid caps here real quick. Anything to note there? No. It hasn't made new highs, which means it's not popular. This is where real growth happens, folks. This tells you we're not actually in the growth market at all. Small and mid caps aren't moving. Money's expensive, hard to get, and they're not getting much. Okay, so nothing new in small and mid caps. Let's just ignore that. I want you to look at Biotech real quickly. Biotech has received more startup money in 2024 than any other industry. Always worth noting. Let's take a look at it. Weekly, anything? Nope. Daily. I mean, there's massive volume in biotech, everybody. Biotech has been something that I was really on board with the low 60s. I've since bailed out for obvious reasons, and it doesn't look like there's a reason to get re-involved yet. Although a ton of money just went into biotech. But I don't like the structure up here. Probably stay away from this a little longer unless you're into shorting. But I'm not going to get into that for now because even the short targets aren't very good. It's just chopping along. I mean, they're definitely short targets here, but I don't see any reason to get involved. Okay, let's go back. Let's stop the share. All right, everybody, as you see that sun coming up there, I just want to leave you with this. Remember, if you're not good up here, you're not good anywhere. If you're having a hard day, we all have them. But I promise you, you will solve the problem. You will. Do you know how I know? Because you solve the problem every day up until now. How do I know that? Because you're still here. And remember something. Like a lot of times it's just about getting out, feeling that sun on your face, right? The sun's coming up over the mountains behind me. It's beautiful. It feels amazing. I definitely have my problems too. Everyone does. Sometimes you have to fake it till you make it. Throw on a smile, right? Until that thing feels real. If you don't have someone to talk to, you have me. You can reach out to me. Here is my information. This is my Twitter handle. That's my LinkedIn handle. And there's my email, right? You can reach out. You can find my phone number on my website. Happy to talk with anyone that's having a bad day. Remember, every day above ground is a good day. All right, everybody. All right. Good morning, everybody. Welcome back to a new episode of Derek Invests. I'm your host, Derek Miller, your host with the most. So what are we going to talk about today? Well, we have to come up with new things to talk about. And we talked a lot about the fact that the 20-year treasury is being, there's a massive amount of trading activity down there after prices have fallen roughly 50% in that ETF TLT. And that should signify to us that interest rates are, in fact, going to drop because rates and those treasuries are inversely correlated, right? So they're inversely related. So as rates drop, prices go up. Therefore, if there's a lot of trading activity at a low price, they're expecting price to rise, which therefore means they're expecting rates to drop. That would also be a very good reason why gold has come off of its high. I think people jumped too soon. They thought hyperinflation was on the way like it was in the early 80s, late 70s. And it does not look like that's going to happen. So gold should probably take a bath. It's also a good reason that oil got pulled down. But we do have some demand going on with oil. And to me, it does look, in fact, strong. But that's for another conversation. Today, what we want to talk about is REITs. And why do we want to talk about REITs? Because what is so attractive about REITs right now is their yield. Okay, so people are buying REITs because they want the yield. But what happens when interest rates begin to drop? What happens to their yield? So you always want to make sure that when you're going into any asset class or any investment, you're not just buying it with this narrow focus. I want a dividend. I want yield. I want income. There's a broad picture out there that you need to pay attention to. So if interest rates are going to drop, what you want to focus on as well as yield is, do we believe that real estate's going to do well? Well, commercial real estate definitely has some major headwinds, right? There's still massive amounts of office vacancies. Why? People are working remotely, and while no one's talking about it, the fact of the matter is these companies have laid massive numbers of people off. So there's not as many workers in the workforce as they're pretending. Ask Airbnb how many people that they laid off and then had AI replace those jobs. By the way, AI destroying Airbnb. I know I talk about it so frequently, you probably hate hearing it, but I have to tell you, that company is doomed using AI as customer service. They right now owe me over $3,500, and it has been 6 weeks now. They cannot figure out how to get me my money that they owe me because I am not talking to people. It's absolutely insane. Anyway, that's a big problem for commercial real estate. When you have a large supply and diminished demand, that is a big problem for commercial real estate, and that's a big problem for REITs. With rates as high as they are, that presented a problem in buying new properties, right, and maybe remodeling or revamping a property, but it didn't really have anything to do with occupancy. High rates have nothing to do with occupancy. They have an occupancy issue there. So if you're looking at rates, what we want to do is we want to evaluate the REIT itself. If you're looking at interest rates, you're looking at yields, so you're looking at REITs and you're looking at real estate, which I happen to be a believer in real estate at the moment because I think that we are going to have, who knows, it could be a decade long of interest rate spikes and drops, spikes and drops. It's going to feel smoother, but it's going to take longer to clean this mess up. We've increased the amount of currency in circulation by 50% in 2021. We have to rein some of that back in. So this is going to happen. So let's start looking at some of these REITs. What are some of the REITs that we're going to look at? We are going to look at Realty Income. That is symbol O. It has a yield of almost 5%, 4.8%. Prologis PLD, yield of 2.6. Public Storage PSA, yield of 4.1. Simon Property Group SPG, yield of 6.2%. Equinix, EQIX, a yield of 2.1%. Digital Realty Trust, DLR, 4.5%. Avalon Bay Communities, AVB, that's 3.5%. Equity Residential, EQR, 3.4%. Welltower, WELL, yield of 3.8%. American Tower Corporation's AMT, 3.3%. So we saw some in there that are in the 4% range as far as yield goes, which is really attractive almost to anyone when it comes to yield. So let's start taking a look at some of these prices. Let's see what the investment itself looks like as far as incoming funds. Let's jump over. I'm gonna share my screen with you here, and I'm actually going to get rid of this. I notice on the last show, it does block a bit of what you see. So I don't want that. I don't want that to happen. Where are we here? Let's go up. Here we go. Let's go ahead and hide that. Before I share, I want you to be able to see everything that I see. Here we go. All right. All right, I'm going to switch positions here, and we're going to get started. Sun's starting to come up on this beautiful morning. While I love it, it's also a bit blinding. So let's scooch over. Forex.com. Will the FX carry trade see a revival? Are dynamic interest rate spreads set to revive the carry trade? Trade with Forex.com today. Bada bing, bada boom. Based on U.S. client assets for 2021 monthly retail Forex obligation reports published by the CFTC, FX trading involves significant risk of loss. Thank you, Forex.com. As you can see, we are on Trading View today. We're going to be on Ninja Trader tomorrow. I'm going to do some future stuff tomorrow if anybody's excited about that. So the first company, the first REIT we're going to look at is O. All right, so let us take a look. This is the Realty Income Corporation, guys. I'm sorry. I am just scooching over here so I know where I'm at. All right. So let's take a look. We're going to go out long on this thing, right? We always start with monthly. And what do we see, guys? What do we see? That's a monster right there. What's that? That is a high of 60. What was the low here? The low 45. That's pretty darn impressive. after a 35% rise to see that level of trading activity. But look what we got here, everybody. This is 2020, by the way. This is pretty impressive. Let's zoom in a little bit. Oh, baby. I'm telling you now, you like that. You look back here, you know what this did. Okay, this is up there at 72.50. And I'll tell you, it obviously was selling. So to drop down to 45 and then see this, yeah, we like that. Let's zoom into the daily. For those of you that don't follow along all that often, or maybe this is your first time showing up, what we're looking at, what I'm saying, ooh, baby, about what seems so exciting is this right here. This. This is volume, okay? And what does volume signify? Trading activity. What does trading activity signify? Trading activity either signifies buying or selling by institutional money, especially when it's at that level of trading activity. Why do I say that? Because there's only one group of people that can leave a footprint that big, and it is not someone trading at Robinhood or Schwab. That is institutional money. And what we want to know is, what does institutional money think about the current climate? What do they think about the current position? And right here, as you can see, there is a ton of purchasing that took place right here at the absolute lows. What do you know? It's amazing how that happens, isn't it? That is right down there at the low of 45.04. All right. And now we see it again here. I just want to be as accurate with this, guys, as possible. It's playing with me. Okay, low 55. I mean, 2%. Significant volume here as well, where we're sitting at 3. What do you think that is, everybody? Well, if that were me and I were a betting man, and this isn't about betting, this is about probabilities, I would say that's purchasing. We are now looking at a daily chart. So let's go ahead and zoom into a 4-hour chart. You always want to zoom in and change time frames, everybody. You want to change time frames. You want to remember what you just watched, what you just saw on the previous chart, but remember that every chart is a new chart and a new evaluation. Here we are down here at those lows. That's that big volume. Here's where that big volume stepped in, which we just saw in the last chart on the weekly. What a weekly chart does, or what a daily chart does, as you step it down, is you're zooming in on time frame, okay? So while this volume here on a daily chart looked much, much bigger than this chart back here, as you can see, this took place all in one 4-hour time period. That daily bar we just saw that was enormous took place over a few days. That's actually a good signal. As is this over here. So let's just keep zooming in. Let's get to a 1-hour chart. We're still looking good. It still looks like buying. Now, this does change the image a little bit in the short term, and I'll tell you why. Because if you're looking at this trading activity here on this chart, and every chart is a new chart, guys, you've got to remember that. I get so many questions on how can it switch. Well, how it switches is as the time frame is compressed. Right? As the time frame is compressed, that tells you what's going to happen more in the near term. And that's why we're zooming in. It's what we want to know. So let's take a look here. Boop, boop. That's probably your average volume. So this here, actually on a 1-hour chart, it's really, it starts here, which is darn close to where we are now, but then it rolls into the highs. And the biggest bar on this is at the highs, okay? So that's definitively selling. Now, we can confirm that this was all selling. How? Look what happened to price. Boom. Now, was there massive buying down here? No. Does this appear to be buying? It does, but the volume doesn't appear to step in very, it's not in dramatic fashion. This looks good, and I would say that is buying. We are on these lows. Okay, when I say buying, folks, what I'm looking at is the trading activity, the volume, and where it's taking place. If the volume was taking place up here at the high prices, and up here at this high price, and up here at this high price, that might concern me a little bit on this chart, because that would traditionally be distribution. It looks to me on a 30-minute chart that this is a bunch of volume here. That's a lot of trading activity, right? I would say our average trading activity on this chart is probably about there. So I like this. It's okay. It's not knocking my socks off, but it's still looking good. Let's zoom into 15 minutes. What do we see here? Volume bubble, gap fills. We like that. Volume to the upside. Let's look at a 5-minute. Remember, guys, it's summertime, right? It is summertime, and trading is it's minimalized at best. Forex.com, everybody, discover your trading strengths and weaknesses. Get exclusive insight into your trading patterns with the latest behavioral science technology at Forex.com. Forex trading involves significant risk and loss, and it's not suitable for all investors. Thank you, Forex. I figured since I'm using this, I'll give a shout out to somebody that pops up. They are paying for the advertising here. Okay, so let's see. Not with me, I mean with TradingView. I am not associated with Forex.com. I'm just reading that because A, I think it's fun, and B, I don't mind doing it. Okay, let's take a look. 15 minutes. Yeah. So normally a 5-minute chart, guys, I would say it's, if it's fall, I'm like, okay, it's a 5-minute chart. We're probably looking at, 2 to 3 days. I've realized here, and I've realized over the years, and then sort of just kind of forgotten it because 2 to 3 day increments don't interest me. I'm either going tick by tick in futures or I'm going long term because that is the way I like to trade. Everybody has a different way. Trade, invest. That's how I make my living. I like that because I think that's the optimal strategy for taxes, time, and trading efficiency. And if you don't know why that's far more effective for taxes, time, or trading efficiency, reach out. I'll let you know. Okay, so if I were looking at this and I were saying what's going to happen in the next week, because we're looking at a 5-minute chart, guys, what's going to happen in the next week, I would say, otherwise, remember, if this was fall, I would say it's going to happen within 2 days. I would say you're probably looking at, you're looking right there. You're looking at 53.43. But there's nothing here to write home about, so I'm not going to take the time to take a picture of this. But if you're looking at O, you're looking at 53.43 without a doubt, I would say, this week. Let's go ahead. Actually, you know what? We might as well throw it up, shouldn't we? We should throw it up. So let's go ahead and put up O. I'll do 53.40. There's no big difference to me. We are in a yellow submarine. No, we are online and we are looking at REITs right now. So let's continue that. We're going to go to blue. Something tells me that these REITs are going to end up looking pretty good. And I'll tell you why I say that. Oh, shoot. I'll tell you why I say that. Because I think a lot of people are starting to really look at this stuff. Is it the 22nd or 23rd? It's 23rd. Okay, I'll tell you why I think it is, because I think yield is very attractive. I think that that rates are, I think rates obviously inevitably are about to fall. I've gone through this on several broadcasts. Let's do target date. I'm wearing this stupid Band-Aid. It really messes up my typing. Let's do 628. I don't even know that the target date matters that much for this REIT. I would hope that you would know why you would be buying this in your taxable account and why you would be buying this for more of a long-term strategy. But if you don't, please reach out. I teach people this stuff. Everybody's completely different, regardless of what your financial advisor tells you. You don't fit into aggressive growth in income and growth, or conservative. You don't. Nobody does. And if you're treating your money that way, you should just see my video on the difference in investing $2,000 at 19 years old and making 10%, and investing $2,000 at 19 years old and making 20% at age 65. I'll give you a clue. If you average 20%, which is about 10% more than the index does, and if you think that's impossible, you've been brainwashed. That's far from impossible. You end up with about $14.5 million by the time you're 65. However, if it's 10%, it's 3.5 million. Still not bad. Then why don't advisors have a bunch of clients with $3.5 million? Well, I'll tell you why. Because when you get scared, they're scared too, and they're going to tell you to hit the eject button every time. They're going to tell you to stay, but then you're going to say, I'm scared. They're going to say, well, if you're scared, you have to do what makes you feel best. They're going to give you a lot of excuses when the truth is selling at that time is the biggest mistake that you'll ever make. But they won't prevent you from doing that because they're not even sure if you should or shouldn't do it. That's not a knock on advisors. They are paid to bring in assets under management and charge a fee. I am paid to make money and teach people how to actually make money in markets. Big difference. They're like the public sector, I guess, and I am like the private sector. I am judged based on results. They are judged based on they work for a giant company with a bunch of money that they bring fees in for. Guys, this looks good on a daily so far. We're looking at Prologis. Let's zoom in a little more. Yeah, I like this volume bubble. This looks really good, guys. This one looks better than the last, for sure. This definitely looks better than the last one. Look at all that trading activity. I like that. Okay, let's zoom into 1 hour. 1 hour doesn't look as good. I mean, because we're zooming in on all that volume, right? So it doesn't look, it's not as standoutish. And remember, what we want to see is what's going on in the short term. We're looking for the next week here. Okay. I can give much longer time frames on what's going to happen. And in many ways, I find that to be far more interesting. But most people want to see what's going on now. Now on a 5-minute chart, is this a good or a bad? Is this good or bad? Well, I would say that after a drop like this, and then having this kind of volume step in, this level of trading activity step in, I would like that. I would. Is there a ton of upside here? Probably not. I mean, you're probably looking at right there. You're looking at 110.44. You're looking at 1% this week, I guess. That's what I would say. Do I like this in the long term? In fact, I'll tell you what I'm going to do. I'll go down to a 4 hour. This will give you like a 4-month outlook look, I like this. I'm going to do this one a little longer simply because first off, you should be buying these things for a little bit longer than you should be in here trading REITs on a weekly basis anyway, not in this market. It makes no sense. I'm going to go ahead and say you're looking at right there. So look, there's 15% upside in this thing on top of its yield. What's the yield on Prologis? 2.6. So yeah, let's go ahead and say PLD. Let's go 124. 124. This will be this will be a target date of 12/1/2024. And we are doing this on 6/23/2024. Beautiful. Target date 12/1. Okay. So you have, let me go back over here. Let's do that. You have 15% upside with what did I say, 2.6? 2.6% yield. All right. Looking good. We're going to keep this one, guys. We're going to keep this one. All right, now we're going to start moving a little bit because I don't like this stuff to drag out. I think people get really bored. So PSA, public storage, just take a look. A lot of repos going on in this world right now. All these storage people coming out of the box again. Okay, this one doesn't look as good. That's a monthly. That's a weekly. Let's see, anything so far? No. Daily. No. 4 hours. See, this is selling for sure. So is all this. Buying down here though. Let's go into 1 hour. Oof. Okay, yeah, this is quite a bit of volume up here at this high price, and there's also some volume back here at this high price. Let's go to 30-minute. Oh gosh. Yeah, I mean that's a lot of volume up there at this price right now. This might be. Yeah, you know what? I'm not going to comment on this one. It's tough to say. There's nothing here that pokes out. Nothing here that. Oh gosh. No, I mean it's the price here is down certainly in the next week. I would say to right here. But there's nothing really to write home about. We're just going to move on. The price there is definitely down, probably a couple percent this week. SPG. This is definitely an up because prices are dropping from here. I'm just going to back out a little bit, guys, since we're only looking out a week or two. 30. What you don't want to do is trade stuff that there's really, very little interest in. So even though I don't encourage you to do this, I've been doing this a long time. If I want to, move in reverse, I usually can because I know what I'm looking for. Yeah, there's nothing here. I mean, honestly, this does not look good. This looks the opposite of everything else. I would say this is to the downside. Let's go back to that 5-minute. Oh, gosh. Maybe you get a little pop, but this is not something you want to be looking at. What is this? Simon Property Group. Yeah. This thing's in sell mode. You can probably get a little bump this week simply because it's fallen so far so quickly. I mean, you've gone from 155 to 145 in the last 10 trading days. It was gapped up in price, which is probably to sell it off. Simon Property Group, not good. Yeah, it's just not good. This is not good. I condense this a little bit. Well, yeah, oh gosh. Yeah, I would stay away from this one. I wouldn't touch that. EQIX, EQ. Let's try to find something that we really like. Let's try to find something with some upside. We have 5 to go here. This, where we at now? Sitting there. This one looks all right. Okay, that's a gap up, though. I don't like that. You don't want to see giant gaps like this. You just don't. And then when you see giant volume like that and price does not go up, it creates a range. This is not a positive sign. There's nothing here extremely ugly either, everybody. I mean, there's nothing here that it scares me, but there's just nothing here exciting either. Yield this Equinix. No. They're the one that's 2.1%. We're going to look at Digital Realty Trust next. DLocal. This one at 0.5, which sort of seems like I think it's the highest yield we're looking at. So I'm always curious about that. You know what, guys? We're just going to stay away from this. This is just not worth looking at. I feel bad saying that. I try to evaluate everybody, and I try to give price targets for everybody, but there's just no reason to give a price target on that. I'm just being honest. It doesn't look like there's going to be a reason to give a price target on this one either. Yeah, this is to the downside. If there's a price target here, it's to the downside. Yeah, some of these are going to get dinged. I can see it. That's on the low. That's on the low. Let's go into a 1 hour. Gap fills. Oh, gosh, price rises. Now there's lack of demand. In the near term, though, you have to realize that you can say, hey, something's going to get dinged, something's going to get hurt. But then you look at it in the near term and you just go, look, there's not a lot here. And like that's the case here as well. There's just not a lot here. I don't want to tell you to chase something or ignore something that there's not a lot to. I mean, the reality is this thing looks like it's going to pop to 149, maybe 25, which that gives you a 75 bip run this week. But it's ugly. I mean, this is not something you'd ever hold. I wouldn't. AVB. I'm trying to get through these for everybody. Avalon Bay. Ooh, a lot of buying back there. Is there a lot of selling? No. Let's take a look here. Weekly. Whew. Actually looks kind of good from that viewpoint. Let's go to daily. I call that nothing. Yeah. I've seen all I needed to see. No. EQR. For those of you that know, you know. For those of you that don't, you don't. Let's take a look. 1 month. No. Guys, we're out of there. There's nothing to look at. I'm telling you, there's nothing to look at there. There might be here. I'm also going to go through this week's earnings and their positions today. I'll get that. Ooh, that's not good. This might be a great play down. Let's go to 1 hour. Yeah, I mean, baby. This is all up at this high price of 102. This might be a good short this week. Let's take a look. High price. But see, as you can see, it's drying up because look, you have to remember something. If we're looking out a week or two and stuff like this, it's real difficult. We did find some. Oh, mama. You would say this looks like supply. Now, I can tell you that this thing looks like it's going to pop 2% this week, but it does not look good. I would not want someone to follow me saying, hey, this should get a 2% pop this week just to get annihilated moving forward because somebody is selling that big. On the short term, you have a buy opportunity. But that thing's getting sold. As I said, there's an occupancy issue, right? And with an occupancy issue, you're primarily investing in commercial REITs, you got a problem. A few of these REITs show it. Yeah. American Tower. I think I have scary news for you, my friend. You are not liked in the marketplace. Several of these are really, really not good. And I'm looking at daily charts, which means I'm looking out 18 months. Oh gosh. Yeah, no wonder yields are jacked up the way they are. Trying to draw in investors. This is another one that in the short term can get here at the low. I mean, odds are this thing's going back up to easily. Yeah, it's easily going to 1. In fact, we'll mark this. But listen, you're not trying to buy this thing, everybody. Don't. AMT, you're going to what? 196. Target date of the 5th. Or no, the 28th. And today is the 23rd. All right, I think we're good there. All right, everybody, I'm good and sweaty because the sun is beating on me this morning. It is beautiful, though, man. Don't get me wrong. It's beautiful. Okay, so that is our reads for the day. That was definitely a split. I would say that was 50-50. Some looked pretty good. Some looked really bad. I hope that helped you. I am going to discuss our earnings this week later. So we have a bunch of companies giving earnings this week. My earnings forecast from 2 weeks ago is 100% accurate. I covered 6 positions. I think there's 8 to 10 this week. I'm going to do the same thing again. I'm going to tell you what the setup is for their earnings release. Remember that oftentimes earnings doesn't have a whole heck of a lot to do with the actual earnings themselves. It is primarily based on where cash flow is already been set up. That activity has already been established on where price will lead. So make sure you watch later today for the earnings for the coming week of it's the 4th of July on Thursday for the 4th of July week. I look forward to seeing you then. And remember, if you're not good up here, you're not good anywhere else. Take care of your mental health. Get out in the sun, sweat a little bit, do some exercise, smile. Sometimes you have to fake it till you make it. And a fake smile will produce a real one eventually. Right. So just keep looking up. Remember, you haven't failed yet. How do I know that? Because you're still here. So you haven't failed. All right. If you need someone to talk to and you don't have someone to talk to, reach out to me. There's my information. I will talk to anyone if they're having a problem that they feel they need help with and they don't have anybody to talk to. Every day above ground's a good day. I'll see you all later. Good morning, everybody, and welcome to today's episode of Derek Invests. I am your host, Derek Miller. What we're going to talk about today is the 5 stocks that should benefit from a Trump victory in the elections, and then the 5 stocks that will benefit from a Biden victory in the election. Why are we going to look at these? Well, this is the first presidential debate with these two guys, and it's the first debate ever with these two guys. Everybody's interested. I know it. So let's talk about the 5 companies that will benefit from a Trump victory, and then the 5 stocks that will benefit from a Biden victory. First one with Trump is Exxon. He just favors fossil fuels, should be really good for the company. JP Morgan, big banks tend to do well under leadership with someone like Trump, simply because he reduces regulatory requirements, tends to increase lending, tends to decrease interest rates. Lockheed Martin is number 3, and that is because defense contractors tend to do better under somebody like Trump as well. What do we have? Geo. This is kind of a sad one, but apparently true. It is a mental health and private business incarceration. So private prisons and mental health institutions through Geo. And apparently that's going to do quite well as well if Trump is to win. And finally, Baker Hughes. In oil field services sector. Again, back to the fossil fuel story. Where did this information come from? Investorplace.com. If you want to read the article, the entire article, I'll post some facts about it. But if you want to read the entire article, it is the Trump 7 stocks to buy if Republicans win the election in 2024, which is going to be Trump, obviously. Let's move on to Biden. Biden has his first company, is going to be First Solar. He's all about solar power and electric vehicles and the new alternative energies, right? So, which is sort of funny because what has done the best under his presidency has been, at least in the S&P 500, has been the energy sector. You can go look at XLE if you don't believe me, which is primarily fossil fuels and your traditional energy sources. Why? If you asked me, my personal opinion on why would be that there just isn't enough alternative energy out there to provide enough energy to keep up with our current energy provider, which is fossil fuels. I don't even know why they're called fossil fuels. They don't come from fossils. They're not derived from fossils. They're not even derived from a carbon-based being. Weird. But anyway, so I don't think there's quite enough of those things yet to kind of keep up. So naturally, with energy consumption increasing and the easiest consumption source being what we call fossil fuels, it's just, I don't know. It's just contradictory, but very funny. So he has a lot of energy initiatives under the Inflation Reduction Act, which allocates substantial subsidies for solar energy products. This comes from, again, investorplace.com. Boom. The Biden boom 7 stocks to buy if the Democrats win the election in 2024. So kind of the inverse article of Trump's. Then we have Enphase Energy, leader in solar technology, right? Big shocker. We just talked about that. Next Era Energy, a major player in wind and solar energy. Taiwan semiconductor manufacturing. Biden says he's focused on bringing semiconductor manufacturing onto the U.S. So Taiwan semiconductor manufacturing could benefit from that if they're brought onto the U.S. to do their manufacturing. ChargePoint, which is charging for EVs, electric vehicles. So what I want to do is I want to run through these stocks, and sometimes what these stocks are going to be able to tell you is who people actually think is going to win. And the reason it can show you that is because if you see ExxonMobil poised to fire through the roof, if you see JP Morgan, if you see Lockheed Martin, if you see Geo, right? If you see these companies, if you Baker Hughes, and they look like they're poised to rise, then you see things like First Solar and Enphase and so on. If we see those looking like they're going to fall, Taiwan Semiconductors, which has nothing to do with anything, then we're like, wow, that looks like a Trump victory. And inverse is also true. If we see First Solar and Enphase and Taiwan Semiconductors, looking like they're poised to run, and we look at Exxon and JP Morgan and Lockheed Martin and Geo, and they look like they're poised to fall, we can infer from that, wow, the major players in the financial world think that Biden is going to win. So let's just go and get started and take a look at this stuff. Let's see what we see. Is there anything here that tells us that, this stuff should go one way or another? I'm going to jump over. Let's share the screen here. All right. So let's do Exxon first. Right, we'll run through the Trump stocks first if everybody's okay with that. And then we'll run through the Biden stocks. Then maybe we'll have something to say there. Now, if we're looking at a monthly chart on Exxon right now, I can tell you right away something that pokes me in the eye. And remember how long-term monthly charts are. This is back in 2020. There's a big buy at the bottom, which there was a big buy for most things at the bottom. And then there's some big buying now. Here in 22. Is there anything now? Is there anything poking us in the eye? I would say no, there's not on Exxon, right? Why do we look at volume, everybody? That's trading activity. Who produces the most trading activity? Some guy over at Fidelity doing a self-directed IRA, or the big players, big institutional money? I don't actually expect an answer there. Obviously, it's big institutional money. That is why we concern ourselves with volume and trading activity, because it lets us know who's placing the trades. And who is placing the trades is far more important than why they're placing the trades. The why doesn't matter all that much. What really matters is the who. Do we see anything here on the weekly chart? Well, back here in 2022, which we already saw previously, we can see what looks like a ton of buying somewhere down around 85. Let's move into a daily chart here on Exxon. Wow. Okay, so there is definitely a big move here. This is just, a couple days ago, June 21st, and we see the same thing back here at just about the same price level. So there are some interested buyers in Exxon right in here at the 110 level, right? If this were selling, and we would know that very rapidly, we're going to know more as we zoom in, then this price would automatically reverse and fall. So let's go ahead and zoom in. As we zoom in, we're going to get a lot more clarity on that June 21st trading activity and volume spike. As we zoom into a 4-hour chart, what we see now changes the story a bit, right? So we see a ton of volume right up here. The prices here are, in fact, they run the gamut from 118 to what's this low? 114. And that was obviously selling because it came down to 108. A fall of 6% doesn't happen after buying, it happens after selling. So now we're saying, okay, we see selling pressure here at 118 to 114. Let's move in a little bit more. What do we see here? Anything in particular? Well, I see a gap that filled very rapidly. And then I would say I see some very interested buyers at this 110 mark right here. Very interested buyers right there. Okay, that's very high levels of trading activity. And you can even see back here, these are basically at the same price levels. This is, this is a high of 113 and a low of 110. Right here, this is a high of 109, a low of 108. I mean, 111. All right, so there is definitely some interest at those levels. Let's roll into a 30-minute. On the 30-minute, what do we see? We see the same thing, right? Big volume, price rise. This is kind of relatively large volume here. There's a lot of trading activity there at our current level of 114.50. We're butted up against a previous high, so that would be expected, right? So all of your trend followers know that this is a level right here. They're going to set their price targets at that level, which is going to create some downward pressure on price. But does there appear to be anything combating what's going on back here? It does not appear so. There's no large gaps in the chart on the way up, so there doesn't seem to be a lot of fear there either. Let's see. What do we see in the near term? 15-minute, nothing there. 5-minute. In fact, let's see. What actually happened here in this last 5 minutes? We had a high of 114.62, a low of 114.38, and a close at 114.40. So it definitely closed at the bottom. That was definitely selling right there. Let's go ahead and let's look out. What we want to know is a couple of months from now, right? Because what we're looking at is election. Well, it's more than a couple of months, but what we're guessing at here is, does this mean anything to the election? Does Exxon mean anything to the election? Well, if someone asked me what I thought, and oftentimes people do ask me what I think, believe it or not, I would probably roll this back to a daily chart just to get a bigger picture. And I would tell you that right now, I would say there is a big bid on fossil fuels. If you were basing your information on Exxon, you have a lot of buying down here. This is buying, guys. This is buying. So I would say right now, what's in play? I would say that what is in play before the election is probably at least a return to this previous high. Call it 122. So let's say Exxon 122. What is today? Today is the 27th. Is that right? Yep. 6/27/2024. Let's do a target date here of let's do September 9/30/2024. Oops. I think that's what that looks like. So that's what we're going to go with, because after all, it's my show and that's what I see. And I hope you see it too. And I try to walk through these things so you can see them as well. Let me save this. All right, next stock. Let's do it. What do we got? JP Morgan. Well, I was a big fan of JP Morgan because JP Morgan has a significant call on downside when it comes to the market right now. And unlike everyone else just jumping on the trend, they see, what I see, which most professionals do see. Now, when I say substantial downside, folks, I'm talking about a correction here. There is absolutely no economic event going to take place. I have said this from the start. I said this while before the market fell, starting in December 2021. I said this is not going to be a major market event. This is going to be a correction. There is no trading activity to signify to anyone that there is a major market event occurring. Okay, so we have some big volume down here in the background on the weekly. What do we have there? Nothing to write home about. And I actually have a forecast on JP Morgan, which I believe has already been met, because I made it down here when we were at 180 and there was this big gap up here. And I think the prediction was somewhere around 200, which it looks like it's met. This is merely buying the dip. Obviously, what do we see up here? I don't like all this volume at this high. So when I have highs sitting in a range like this, what I look for is where in the range is that price taking place. I don't like JP Morgan the way it looks at the moment. That is not exciting to me. I don't like it. Let's take a look here. Anything here? No, that's buying. Let's go down to the 1 hour. That's at a low. I like that. So in the near term, I like where the price action is. Look at this big trading activity here. I like that. I like this. I like this. So I like where it's at in the near term. Let's go into 30 minutes and see. I'm gonna have to switch seats here. That beautiful sun's starting to come up, but it becomes very blinding for me at a certain point. Let me adjust this. There we go. Okay. Yeah, I like all this. This looks very, very good near term so far. Let's go into 15 minutes. What do we see here? It looks good, guys. 5 minute. $30 minutes. Is there anything to draw from this JP Morgan chart thus far, everybody? Is there anything here that we can draw from to say where we think price is going? I would say it looks as though price is going up in JP Morgan right now still. There's not enough here to give you a price target, so let's move on. I would simply say that as far as JP Morgan goes, it is definitely a buy in the near term, meaning, any right now in the summertime, and that should lead you into the fall. But there's not enough there to give you a price target. Okay, I'm going to switch seats here. You can probably see a little wiggle on the screen there. All right. So Lockheed Martin, let's take a look. What do we have? And look, hey, listen, I have not looked through these, right? I'm looking through these live with you to see if it tells us anything about the coming election. So we see a bunch of buying down here. That's at like the 250 level. Just call it the 250 level. Right now you're at 467. Pretty inconsequential. This is sitting in a range at a high too. Yeah, it sure is. Let's go off to a daily. What do we see here? Do we see things we like or things we hate? I definitely don't like that. I definitely do like that. Right? So 435, it looks like there's a lot of activity and prices rise 30 points, which in this case is only about 12, 13%. But then this is not good because this is at the high price and trading activity is up. I would say right there does not look good for Lockheed Martin. I'd say the same thing about that. Yeah, I mean, in fairness, I would say I don't like Lockheed Martin at the moment. Yeah, this is terrible. I mean, this looks, that's selling at the high. It's right on top of you. I mean, that's what that is, guys. That's selling. And it is right on top of you. Let's see. Looks like it may be poised for a little bounce here, but if I backed it out to an hour, and then I even back it out a little further, I don't like it. I don't like Lockheed Martin. No. I do not. Reversal these highs. The one thing I do like is it's continually touching this high watermark. that tells you that it most of the time it's trying to build momentum to break through the high. But I have to tell you something. This thing's in a range. It's definitely range bound, right? So this is your range. That's probably your bottom line there. I do like that it poked through the bottom of the range and then bounced. This is typically a search for supply, a search for more stocks to take you to higher prices, right? Does volume tell us that? No. I would say that the trading activity right now is kind of it would be tough to say right now. It would be tough to say. So I'm not going to. I would just say I wouldn't buy or sell Lockheed Martin. I see there's a dogfight right there. Let's go to Geo. Let's go to 1 month. Let's see if there's anything. Whoo, baby. All right, that's buying. That's for sure. And that's in June of 21. So this bottomed and did not participate in the downside as everything else. But that's because it came from 34 down to what is that? 5. It was annihilated already. Let's go on to a weekly. Take a look at this weekly. Anything back there? Yeah, I mean, this is hard to contend with, right? And it's rallied 300% based on that trading activity you see back there. That's why trading activity is so important, guys. When you see something rally 300% on trading activity like that, it matters. Where do we sit now? All of these huge bars of activity matter, right? We're looking at daily charts. Is there a lot of huge volume at the high? Well, you could argue here's one. You could argue here's one, I guess, because it's close, I suppose. It's still $3 off 16. I mean, the thing is, that's still 20% below. Right now, I would say Geo's looking good, even though it's rallied 300% from its lows, which are down like, 90% from its highs. So easy with that. I try to take it easy with my verbiage. I don't want anybody to get the wrong idea. It's bounced down here. Is there any major? So there's some major selling here. You would believe this is selling, right? This big long bar, this big piece of trading activity. But you know what? Price fell and then just rallied hard. And it's off this chunk of volume right here. It's off this trading activity that took place right here. That was earnings, right? So that earnings, while they said it as a disappointment, if I were looking at this, I would say it was not a disappointment. It was rather exciting. And people definitely were into it. Let's go on to 1 hour. Anything here? Buying, 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 buying. 30 minutes. It's buying. It's buying. I mean, it's yeah. That's all buying. Okay, that's definitely selling. That's why you went from 14 to 13.30 inside a day, right? So 70 cents on 14, you're looking at 4% right there. It's a 4% drop based on that activity. Do we have the inverse activity here to drive prices back up at the moment? No, we don't. But if we come back out a little bit and you look at it, see all this buying down here? This is what pushed it up. I would actually say Geo is looking very, very promising. This looks like something. This looks like something aiming at a Trump victory. That's what I would say. I said this looks up. This looks up, up, up. You're without a doubt. Yeah. This is definitely an up chart, everyone. So this would speak highly for a Trump victory, I think. So far, the things that are speaking for the Trump victory are Exxon and Geo, right? That's what I would say. All right, so we have a final Trump stock here. I call it a Trump stock simply because it's one of the stocks we're looking at that's supposed to bode well for a Trump victory. Not that Trump himself cares probably one bit about that company, or maybe he does. I have absolutely no idea. Baker, BKR. And this is, remember, oil field sector. So oil is coming out of a tremendous market. Look at this. So this is an oil field service sector. So this doesn't have big moves one way or the other. That's the truth. I don't know that we're going to see much here. Let's go ahead and take a look, but I just don't think you're going to see much on this one. A lot of buying down here at 29. $31. There's nothing here. This one's kind of moot as well. So 2 of the 5 Trump stocks look like they're going to do quite well. This looks like buying in the near term, but this was selling in the near term. This looks, oh, goodness gracious here. That was definitely buying, which caused that. Yeah. I would say short term, this thing, hits what, 35, 34.85. Let's move on. We're moving on. We're moving on to the Biden stocks, all right? So Trump had two companies that really looked like they favored him for the victory, so to speak. Let's move on to Biden. What's he have? Whoa, what is that now? Is that good or bad, everybody? Is this good or bad? Big, giant, long bars. Is that good or bad? First Solar. All right. So there's a monthly. We see it. There's nothing really there to write home about. This is not good. This is not good. This is pumping price up to sell it off. If you can't see exactly what I'm looking at, I actually want to show you this. That right there is nothing more than an effort to bolster price right here, guys. And it takes you all the way up to there. That is an effort to bolster price to 280 from 200. And that's an effort to sell it. That is not legitimate. And that's why it's back at 250. That's a $30 fall on 280, 300. That's a 10% drop this thing has had since that major trading activity right here, which started at 200, by the way. So that is not good. That is saying that this thing comes back to 200. Yeah. But we're on a weekly, so let's move on. Let's get a little tighter. But that is just not, that's a bad indicator. Oh my God. Yeah, it's just not good. This is not a good indicator. First Solar was pumped up to be sold off. I would not call that good. If it were me and I were playing this, and I can say this right here. So let's do it. Biden, that's not good, buddy. This one's not good for you. First Solar. If in fact these are the companies that actually benefit. I took it from an article that I've already cited. 198. Yeah, that's not good. This one actually is unattractive to a point of you would question whether it's election related, because to pump up a company like First Solar like this before an election, yeah, that is a bit, that does make me wonder, actually. I didn't really see a lot with the Trump victory stocks that made me believe really like, wow, that's showing like he has tremendous ability there. I mean, most of them are inconsequential. I didn't see any going down, and I saw 2 that definitely looked like they were going up. So let's just do the same. We'll do the same date, guys. 9/30, 2024 on this First Solar here. But this one certainly is ugly. I mean, without a doubt, this one's ugly. This does not bode well. Let's see what we have next. Let's not draw any conclusions, everybody. So first Biden stock. Don't you Trumpers get all that, get too excited just yet. We have no idea what's coming. Trumpers, what a funny name. I have to tell you, I don't like terms that minimize someone's opinion. So I actually despise that term. Having nothing to do with Trump himself, I despise any term that just minimizes somebody's thoughts or beliefs into some caricature. Oof. End phase. Now, let's be real. We got to zoom out to a monthly. What does end phase show us? Well, we got a rally here. This is a high. Let's keep going in. Let's keep going in. I actually kind of like what I'm seeing at the lows here. This looks like buying. This looks like a lot of buying at the lows. People might like this one. I want to show you something here. And I have to be careful because I don't want to take too much time. People get bored when I explain too much, but I don't know the point of this show. If you're just looking for picks, you can just become one of my students or ask me, and I can tell you my picks. This is supposed to teach you. This is all buying down here. Look at all this high trading activity. Now, there are points at which they're selling. Obviously, you're looking at a range, but look at all that buying down here at these. Look at this. These are all at the same prices, everyone. So end phase is looking like a Biden win, a Biden showdown. Let's see. So $12.95 for a TradingView monthly plan, $24.95 or $49.95. Remember, those are annual memberships. Monthly memberships will have an increased price. Try it for 30 days. I like TradingView. It's good. I've been using TradingView for a long time. I'm starting to look at some other software as well. I've started using NinjaTrader. I like the ease of which I place my trades with NinjaTrader thus far. But TradingView, I haven't really placed a ton of trades with. So I'm not sure, but I do really, really enjoy TradingView. Just so you know, that's just a personal thing. I have no affiliation. They're not paying me. I don't use them because of that. Not that I don't want them to be paying me. I absolutely do. But they're not at the moment, which, sort of seems not right. TradingView, we should do something about that. Okay, there's gaps on this chart that fill. So that I like. I like a chart that fills its gaps. Why do I like that so much, everybody? Because it's clean. That's why. Because it means that the price action is not just willy-nilly. And look where all the buying is. This is a daily chart again. I actually like this one. End phase is looking like accumulation. Accumulation meaning institutions are buying at a particular price point. And even right now, the fact that it's down like this, see this gap at 117.50 down to 110. That's, to me, that is the goal here was to scare retail out of this position so that institutions could buy the hell out of it at a much cheaper price. Okay. That is exactly what I see here. I'm going to zoom in and see if there's anything, that I could say, hey, you know what, guys, I got to be honest. Let's keep going. I mean, this is a winner chicken dinner for Biden. Probably far more so than any winner that Trump had. Really, it really is. On a 15-minute, look at this. We're going to, guys, yeah, I like this one. Somebody believes this thing's going somewhere. Absolutely, somebody does. You Trump supporters better do something. You know what I mean? I like how fired up everybody gets over politics. Like, you should have your opinion, and your opinion matters, certainly. But the fact that you all will hate each other over it is, come on. That's crazy. You kidding me? You get me to hate my friends over a stranger. You've just accomplished quite the goal. He wants to burn the country down. Well, I doubt anybody wants to burn the country down, especially a couple of rich guys. Okay, we're going to say price target at 118. And I have to be honest, I like this one a lot. It could happen. This should happen before the election. Let's see. Let's make a target date. I mean, we're running with the election, huh? Should we keep the same target date? I mean, I'll move this one in. This is 15 minutes. I'll move this into, where are we at? We're not even in July. Let's do 8:15. I mean, this should move much quicker. Oh. All All right, M face for the Biden victory, everybody. This one definitely speaks to him for sure. First Solar was not good though. That looked like a contrary opinion. I think the Trump supporters are going after First Solar. Not sure. Just kidding. All right, what do we have next? Hold on, let me go next. NEE, Next Era Energy. This is wind and solar. Let's do NEE. Here we go. We're gonna back out of this one. Let's see what we see, everyone. That is a monstrous amount of buying in October of 23, huh? You can see what happened in 2020. This thing looks like it wants to run. And it looks like it wants to run for a while. Guys, I'm telling you now, thus far, the market says Biden. Ooh, baby. I'm telling you that this is something being accumulated. That amount of volume didn't just come out of nowhere. What's this? Okay. We want to look at the prices. So these are down in the high 50s where this activity took place. This is the low 60s. That is definitely a buy the dip. We want to grab it. But it did gap down. It did fill the gap. Look, we're looking near term and long term here. Man, if you can't see that this trading activity stands out, I can't help you. And I realize it's at high prices, and I don't like that because you look back here, you see about the same level. Look at that. It's about the same level. About the same level. And it's way below in price, right? Way, way, way below. 20%, 22%, something like that. Zoom in. Every chart's a new chart. Here's a gap, massive activity. Here's a gap, massive activity. See it. This again, this looks like accumulation. You know what? We're going to say on this one, yeah, this is big for Biden, folks. I'm just telling you. It is. You have this sitting here. Let's get our price target accurately here. Probably just call it 76, which is fine. Whoops. Wrong one. NEE. We're going 76. We are saying target date 9/30/2024. But we're going to do, we're going to do a longer term target on this one too, because this one's being accumulated in the longer term. It is. So we're at 6/27/2024. There we go. We'll leave that just as it is. There we go. I'm gonna push out a little further on this one too. There we go. Let's clear these and go out to, we can go out to a daily. It might even be a weekly. I mean, this thing is really being, yeah, let's go to a weekly. I mean, look at this. That exists on a, let's leave it where it's at. This is supposed to be about the election, right? But if somebody asks me my opinion, 92's in the future here. Just a year out, you're looking at 92. Let's go on to our next one, though. Let's go on to Taiwan Semiconductor, TSM. This is all about bringing semiconductor manufacturing to the U.S., right? Or so I read. All right, what do we see? Well, we know semiconductors have crushed it this year. So this is not out of the ordinary. We get it. We see it. We know it. Anything here? Well, it's a little runny. It's 50-50 on this weekly. I mean, price has not really exceeded the highs all that much. And a lot of this volume is definitely sell pressure. I mean, you have this trading activity at 160 and prices pull back a little bit and they run. But just because prices run doesn't mean that there's not a bunch of selling in there. Let's move on to a daily. Let's see what we see. Wait. Zoom back in. Oh no, I accidentally zoomed out there. See, I like the ease at which I can adjust trading views charting. You can zoom in and zoom out, zoom in, zoom out, scoot to the right, scoot to the left. I really enjoy that. I think that's really a great feature. Not all charting does that. You're zooming in, then you're hitting arrows to move back over to the right, hitting arrows to move back to the left. Okay, this high level. Okay, and same here. And there is a gap down here. Let's see what gaps look like on this company. Are gaps even really acknowledged? I would say no. Gaps are not really acknowledged in this chart. They don't seem to care much. And that happens when you're looking at companies, guys. You're not looking at indexes. We see gaps on indexes. It's just a matter of time. Period. It's just a matter of time. I tell people that all the time. They're like, yeah, what if it takes 2 years to get back? I go, well, if you wait 2 years for a 20% drop, right? So you stay even. So let's just say you neutralize your position all at once, which you would never do. But so you don't scale in, you don't scale out. You see the 20% below you is a big gap on the S&P 500. It takes 2 years to fill that gap. Well, you made 20% in 2 years, okay? So you made 20%. Well, everyone else is going to ride it up. They're not going to cash out, and they're going to fall. They're going to lose 20%. You made 20%. Everyone else lost 20%. You are 40% to the green, my friend. Did it matter that it took 2 years? No. People get, when you're dealing in markets, stock markets, the one thing you're always going to be fighting is impatience. You have to be patient. If you're playing stocks, you have to be patient. Sometimes things take a year. Sometimes things take a couple years. Sometimes things take 5 years. But that's not what it's about when you're in the market. The market isn't about 2 and 5 years. You have to realize that. You want to make money faster, you have to get into derivatives. Plain and simple. You don't have the patience for that, you got to get into derivatives. Because if you hedge a position that falls 20%, well, everybody else, they ride it up. Say they ride it up 15%. They're never going to cash out, so it doesn't matter. Because they're never going to actually make that money. You, on the other hand, when it falls 20%, which apparently you don't scale in and out in this analogy, okay, this chart doesn't tell us anything. Taiwan Semiconductor, thanks for nothing. You, on the other hand, because you don't scale in and out based on this analogy, are up 20 when everyone else is down 20, which means you're up 40. What do we see here, everybody? Well, first off, I don't like anything that does this, but it's new. So we're going to look at it anyway. Charge point. I mean, look, this is when the EV world came to light. If you remember, right here is where Tesla was about 70% higher than it is. No, it's about 50% higher than where it is now. The lows on Tesla, though, were 75 below this same. Let's see, what's the month there? December of 20. No, the high for Tesla was in 21. Doesn't matter. This thing's still sinking. There's a lot of trading activity down here, but in fairness, I mean, it's still, where's it fallen? So let's start right there. Let's just say the close of 344. It's down at 140, guys. It's massive. It's 66% below where it was when all that trading activity picked up. Nothing to write home about there. What's the daily look like? Big gap filled. Look at that. See, even this company minds its gaps. That's funny. Pulls down, nothing here. I don't think we're going to see anything here, guys. I mean, this is a cheap stock, which is the only appeal really for you guys that look for cheap stocks. And by the way, I never understand that. I'd rather buy one share of something at $100 than 100 shares of something like this, because that will have a real setup and far less manipulation. Like it, like it, I suppose. Yeah, I mean, I don't like this company at all. All right, so that right there, my friends. I'm going to zoom out here. As you can see, that sun's come up. Look at the side. Look at that. Woo, baby. Now, if you actually want to see me, I'll have to go like that. There's my pool. There's the golf course. Been staying here for a couple of months. Love this place. It's so nice, so peaceful. All right, listen, everybody. Remember something. If you're no good up here, you're no good anywhere. Take care of your mental health. Your mental health guides your physical health. Okay, and all of that starts up here. Got to keep this good. And don't forget, one of the major determiners of solid mental health is your gut biome. You got to take care of that diet, right? It'll help you. It keeps you sane in an insane world. Now, what do we learn about Trump and Biden? Well, we have to say this. Biden has 2 stocks that look like, whoa, they are poised to move. 3, pretty lackluster. And 1 that looked, or no, 2 that were kind of lackluster and 1 that looked not good. First Solar did not look good. That charging thing was not, charge point was nothing. Who cares? Don't even pay attention to it. And then what was the other one? Can't remember. I think we looked at Taiwan Semiconductor, and semiconductors have done really well this year. And then Trump had a couple. I hate to say it, but if I had to go either way, I'd say Trump stocks were really neutral. I didn't really see anything that was incredibly negative. And I saw 2 that look like they're ready for a move, long-term, short-term. Not nearly as an explosive as an environment as Biden. But look, you got to remember, the Trump stocks are in your tried and true. Your Biden stocks are in your alternative energies, your semiconductors, things that have to do with AI. So they're a little more volatile. So the 2 Biden stocks are like, woohoo, yeah. But then the downside is like, oh my God, no. Whereas Trump's are kind of like, hey, this one looks good. This one looks good. Stay away from these 3. So I hate to say it, but it appears to be a tie, folks. If I were going to lean one way or the other, I'd say it's a tie, man, 50-50. So the 5 stocks that benefit Trump and the 5 stocks that benefit Biden didn't help you one bit. Maybe the debate tonight at 9 on CNN will help you. I have no idea. Anyways, listen to me. Every day above ground is a good day. If you are not feeling well today, get out there in the sun. Do something that makes you happy. Put a smile on your face. Fake it till you make it. Look, you're going to overcome whatever challenges you're having. How do I know that? Because you're still here. You have never failed yet, and I don't anticipate a failure. And if you need someone to talk to, you can always reach out to me. I put this up at the end of every show because I mean it. Feel free to reach out to me directly if you have no one to talk to. I'll talk to you. Okay, remember, every day above ground is a good day. Thanks for joining me. Good morning, everybody. So the debates were last night. I put some stocks out that should benefit. Depending on who the winner is, right? I had an interesting question this morning asking if a price target was simply based on the fact that Biden would win, or if a price target was based on the fact simply that Trump would win. I'm going to revisit that with that direct question, because some of those stocks, yes, it would take a win to push those price targets. Some of them, it would not. Effectively, what I was doing was I was going off an article saying, hey, these stocks benefit the most due to the policy of these 2 guys. And I wanted to show you what I saw. And some of those targets were based on the fact that that person would have to win, because that's what would drive that price. That's what will push. However, if you saw on there September 30th, 2024 date, that is before the election, right? Or I might have had October 31st on some of them. That's before the election. So no, that person does not need to win for that to happen. Okay, so moving on. Dividend stocks. I figured, we never talk about dividend stocks, but they're an interesting play in the market, and traders and investors alike play these stocks. So let's take a look at them. So we have Dividend Declarations, Eli Lilly, AT&T, Pfizer, and Salesforce. Then we have the Dillinger calendar. We have Cube, PGR, Cisco, JP Morgan, Dividend Increases. We have Jeff, Kroger, Levi's. And so let's take a look and see what those setups tell us, and if, in fact, they tell us anything. I think this is good for a lot of you guys out there that invest long-term and like, hey, I own for the dividend, which can be great, but sometimes dividend declarations, increases, and even the upcoming dividend affects price enough where it's worthwhile to make a decision on what to do with those stocks. So let's jump in there and let's get started. Forgive me for looking down. I always look down so that I can look at the stock position. So let's go ahead and share. Let's go ahead and share our screen here. All right, here we are. So I'm in the middle of a Dow's futures play now. A lot of people say you can't walk away from futures, but with the Dow, it's $5 a tick, right? So as opposed to like the S&P, that's $50 a tick. So you can afford to pull up 15-minute charts if you know how and play them and walk away and do your job, which I do. I've already made 1,000 this morning, or a little over 1,200, and it looks like the way the Dow's moving there, I'm probably up a bit more than that now. You set your sells, you set your buys, you do it on a 15-minute chart. You can go and do your job. You don't have to sit there and stare all day the way that they show you on TikTok. Okay, Lilly, let's take a look. In fact, I'm happy to jump over and show you where levels are set if someone is interested in that. No one, I didn't get a lot. I have to be honest. I just didn't get a lot of people watch any of my future stuff. And maybe that's because that's not what I do. So they weren't interested in watching. Eli Lilly. Oh, Wanda. Is tab switching making you miss out on profits? Losing profits because of tab switching is old news. All your charts in one place. Wanda X Trading Views. Sign up. Leverage trading carries a high degree of risk. Losses can exceed your investment. You got that right, especially if you're in futures, guys. All right. Options. I mean, most derivatives, as a matter of fact. So, Lilly, what do we see here? This is a major move up from 820 to 910. There's no volume to speak of down here. Let's zoom in a little bit. I doubt there's going to be an earnings play on Lilly based on what I'm seeing here thus far. Where'd that volume come in? That volume came in at 700. This would have appeared to be there was some selling pressure there. Obviously, buying to go from 8 to 900 on Lilly. Let's see what we see here. All right, obvious sell pressure, right? Gapped up, filled the gap. This chart minds its gaps. Interesting. So it's clean. I like clean charts. Up. Is anything occurring right now that pokes you in the eye? Maybe a little bit of a lack of volume, but that's a market characteristic right now. So that doesn't make me nervous. Have we exceeded a sell pressure area? Yeah, right here, 909, 910. I mean, you are sitting on it, I suppose. Boom. What's the news here? Nothing. Okay. 1 hour. Nothing really to say there. I mean, there's just nothing scary, nothing exciting. Again, you got buying in the background. I don't see any major selling. It's starting to take a heck of a lot less selling to sell this thing off, though. I will say that. Go into your 15. That's buying. They're still buying the dip in this thing. As much as it's gone up, believe it or not, they're buying the dip. Now, this large bar upwards here, this trading volume that took place, this trading activity that took place here, basically sitting at the high. That's pretty interesting. So is this one. That's pretty interesting as well. You know what, though? I just don't see anything here that's going to give me a strong opinion either way. You're probably going to come back down and retest this 906 area, 907 area. Outside of that, there's really not a lot to say about Eli Lilly, everybody. Look, sometimes there is, sometimes there isn't. We're going to take a look at AT&T, Pfizer, and Salesforce. So let's move out to AT&T and see what we see. AT&T, what do we got? Ooh, you are ugly and not moving with the market, lacking strength. So that's monthly. That's weekly. What do we see? This is some trading activity. It's reasonable volume down here at $14, which is probably why you're sitting at 19 now, because I don't see any other reason. 1 day. What do we see here, everybody? Anything? Well, the fact that it's exceeded these levels. Who do we have there? Trade Station, not a one-trick pony. Winner of the 2022 Multi-Asset Broker Awards. Hey, I was talking to the CEO of Tradeer yesterday, and it's unlimited for your first month trading those options at $10. Unlimited. I think before I had said it was 1,000 contracts. Unlimited first month, $10. Can't beat that. Happens to be a really nice guy as well. I like Dan a lot. We haven't talked that much over the years. We met years and years ago, and I recently reached out again, and he was kind enough to jump on a call with me, and we had a nice chat. I really enjoyed it. Unlimited contracts, $10 for your first month. 4 hours. Let's take a look here. Anything. To be honest, this one too. I mean, look, we're looking at dividend stocks, folks. So, okay, this I don't like. I never, ever like large bars that just go straight up in 1 hour. This dictates the market this morning, though. I mean, this is what it looks like. So let's not get too carried away. But you're looking at 18.80, 20 cents. That's 1% below you. There's not anything here to be fearful of. We're going to back out. There's no short-term call to be made there, folks. Let's go to Pfizer. All right, on a monthly chart, what do we see? Well, obviously, this is when everybody thought that Pfizer and all the COVID-19 drugs were going to rule the world. So they went from 20 to 60. There's, thereabouts. Does this look like buying that stepped in? It does, actually. After a pretty significant fall, that's a 50% drop. Trading activity is definitely up. I would say it's double what it has been, and that's on a monthly chart, folks. So that matters. That definitely matters. Let's see. Oh my goodness, this weekly volume matters. Yeah, we have a definitive activity bubble, a volume bubble down here at these lows, right at 25 to 30. And this is significant. This definitely means something. That is going to be buying activity. They're going to try to push another COVID agenda and give everybody Pfizer again? I don't know. Or perhaps the price has just fallen far enough that buyers have come in. I mean, you could see any gap down after a 50% drop is only one thing. You're inciting fear so you can pick up more shares. Look at Pfizer. That's what this is. You want to pick up more shares after a 50% drop? Gap it down. Gap it down 20%. That'll do it. This is all high trading volume, and this is all at those price lows. In fact, it's still going on right here. They're finding less and less supply, folks. So what you do when you drop a price, when institutions are sinking a price because they want to buy more, they're going to take prices down. And when I say pick up supply, they're going to buy stocks. That's what I'm talking about. And as the price stays down there, what you want to see is you want to see a volume drop, in a trading activity drop. Why? That means they're picking up more and more shares, and there's less and less to buy. Once they've bought up the supply that they're able to buy up, because other institutions own, you have, what do you guys call them now? Where people don't sell whatever they own, and they think that this is a good strategy. I can't remember, but it's really funny. It's crazy. It's over in the crypto world, and they're just, we're never selling. Yeah, we'll have fun with that. Now, I don't mean crypto specifically. I mean anything. The most foolish thing, the most foolish activity I've seen in a very long time. Pfizer, and then we have Salesforce. Okay, so Pfizer. Let's keep moving in on this thing. All right, so we got buying down here. We have buying down here. What do we see now? We saw a rejection up here at around 30. Any large volume up at that rejection point? No. Business as usual. Zoom into 1 hour. What do we got? Do we see buying down here at the lows? We certainly do, right? We see it all over the place. Here's some selling. Here's some buying. 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 This is probably selling. Let's go into a 30. Buying. 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 Now, if they are announcing their dividend, if they're declaring a dividend, why is there most likely buying? Well, institutions that have dividend funds are going to go in and buy it. It's a price driver. It's a fundamental cash flow price driver. You have a ton of buying down here. What's going to happen to Pfizer in the near term? It's going up. It is going up. I would say go ahead and look for let's go ahead. You're gonna in the next. Oh, that's too tight. See, nobody cares about that. That's the problem. That's why I give longer term announcements sometimes, guys, because nobody cares about a percent these days. They just don't, and that's all that is a percent. Let's go out a little further. I'm going to give you a little bit of a longer term time frame. Yeah, there you go. That's only 2%, but this is going to go out about a month. This should hit this within the month. You know, I'll even give you a little more. No, you got to go 28.60. You have to. It's 2%. It probably has more to go than that. That's the truth. But that's where I'm going to put it. Pfizer's a buy, especially if you're long term right now. This is in play. You're looking for dividend stock that is going to be treated fairly or is going to have rising price now that declaration has come out. Well, you have one. Here you go. There's one for you. Let's say, what's the target date here? Target date, whatever. Does it matter? I mean, you should be buying this for a longer term position anyway. Let's just say 8-1. All right. That's a good one. For you guys that know how to run money and actually run your money correctly, therefore you own some portions of your portfolio are long term, meaning over 12 months, to avoid ridiculous taxation because you don't feel like being in and looking at this stuff. I mean, you don't have to look at anything daily if you're swing trading, probably weekly, but still, I mean, you don't want to be in here looking at it daily just in case something is announced. You don't want to be in here weekly, with your entire portfolio. Well, there you go. This is your stuff right here. This is a good one. All right, let's eliminate this. I'm going to give you a longer term picture here on this one as well. Let's take a look. By year end, you'll be at 29.60. I'll put that up there. Let's do a 29.60. Let's do 6/28, 2024. I hope I did that last one with the right date. I can't remember what I did. Actually, this should happen before that. This is a 1 hour chart. We'll say September 9/1. There you go. And let's put target date on there so everybody knows what we're looking at. Again, this is going to be a longer term position, everybody. Beautiful. What did I say? Salesforce is next. Salesforce CRM. Yep. Hey, who wants to see TradeStation? I don't know if you're going to be able to see this or not because I'm not sharing this page with you. So we have one. I'm going to the upside here. I have one running. Let's just let that. I made 1,500, 1,600. We're out for the day, everybody. There we go. Sorry about that. I had to close a position. All right, let's take a look at Salesforce. So yeah, guys, those of you that have $10,000 accounts and you think there's nothing you can do, that is not true. In the futures world, I mean, that was $1,800. It's 7:19 in the morning. Market hasn't been open for an hour. I average about 2,500 a day, but since I'm sitting over here doing this, I'm not watching. I've kind of hit the levels that I expected to hit, so it's time to get out of there. Okay, ton of buying in the background. Let's zoom in on Salesforce here. Weekly, what do we got? This is definitely a huge buy bar. I like you. When's that? May 28th. Let's go to daily. Big gap. See, it's looking to fill. So this isn't something I would get in right now because looking to fill that gap. That's what it's hunting. And then it's going to get pulled back. I'm not telling you it's going to fill that gap and never go back up, but I am telling you it's going to get some pushback on that thing. You're going to get some pushback at 267. You're at 258. 1 hour. Yeah, let's just say that within the next month, you're going to hit 267. Target day. Oh, wait, we got to put today up, right? 6/28. You know, I wasn't doing this before because I figured most of the people that were watching happen to be my students and they know how and where dates are based on the time frame I'm looking at. And then I realized that there's a lot of people that are starting to watch and ask me questions that are not my students and have never worked with me and have no idea how far out a time frame should go. And honestly, that's personal. That's the truth. That is personal. For me, when I look at a 1 hour, and it's also seasonal, like what a 1 hour chart means in dead summer and what a 1 hour chart means in September and October and November of the fall, September and October primarily, these are two different things, guys. Volume and trading in the summer is so much lower than it is in the fall. So guess what? It takes longer to achieve the same targets. Not as many people are trading or they're not as active. Why? Because we have families, we have children, we have kids, we have lives, right? So, all right, so we're going to move on from this and we are going to head over to what do we got next? So those were declarations. Let's go to increases. Jeff. Hey, giant bar up on low volume. I don't know that I'm a monstrous fan of that. Yeah, popping through a high on high volume. It's not gap through. It's high volume. High volume is good. Gapping is not. I don't like gaps. You see? This is what I was just saying. I do not like gaps to new highs. They are untrustworthy. Now, it did gap and take off from the previous high, which, okay, fine. That's not nearly as ugly. In fact, that doesn't make me distrust the move. In fact, the fact that I'm looking at a 4 hour chart and this is your gap up on big volume confirmed by more big volume with price up. And we'll see what it confirms here. You know, I have to tell you, though, here's the thing. With any of this stuff, I am always looking for a return to the previous high. So would I buy this? No. Am I telling you this is a sell? No. I would just stay away from it. It looks like it's upside to me, but it should return to that previous high if it's real. And so there's no reason to buy that. There's absolutely no reason to buy that. There's no reason to jump in there. Kroger, what do we see? An increase announced, previous high bounces, which this is normal. It's not on high volume. That's a good thing. Let's move in weekly. I think this is going to be something that I'm not going to have much of an opinion on just looking at it now. I just don't see how See how it gapped through and now it's filled? That's what I would expect for Jeff, JEF. This is what I would expect for Jeff. And now what you're seeing here is a lot of volume step in, a lot of volume, but the price hasn't really moved down all that much. So that probably is buying now that the gap is filled. This is most likely buying in here now that that gap has filled. Let's see if there's anything here that remember, there's a million positions. Okay, I would have to tell you that is buying at this point. Yeah, that's buying. That's buying. But as you zoom in, you'll have an idea of when price should take off. And as you can see down here at this 50-50 level, this is a bunch of buying. And what do we see? We see volume drying up. Most likely why? Because this was a search for supply, right? A search for, is there more stock for us to purchase? As you can see, there's a gap here. This gap is filled. This should create pushback. We should see prices come back down. They should come back down simply to check for supply. But as we saw in the previous charts, that may not be the case. So I would look, I would say that I would give this upside, Kroger. I would be looking up on this one. We're looking at this for a dividend, so I'm going to back out a little bit and give you a little bit of a longer time frame because that should be what you're looking at here, guys. I hope it is. I certainly hope it is. What do we want to know? Where we're at by the fall or where we're at by the end of the year? Well, 10% would give you end of year. I would say you're sitting back. Let's just call it 53 for argument's sake, right there. You're sitting at 53, which is still a nice move by October 1st. There we go. I promise you I'm going to move a little quicker through these next ones. I don't know. How long have we been on here? We have been on for only 25 minutes. That's not bad. What's next? Kroger and Levi Strauss, which I believe I looked at recently. That's a 1 hour. 30-minute. I don't really care why that happened. Whoop. You're there. You're there by October 1st. It makes no difference why that happened. I can tell you what's going to happen to that stock in 2 seconds. Oh, let's just do what I say for price. 22. Let's just say 22.50. No. Go away. $22.50. Let's do target date. In fact, I should just be doing this the whole time. I just feel like when I kind of separate them, it's a bit easier to read. Less is missed. I've been paying attention to clarity and making sure people understand exactly what it is that I'm saying here recently. And the reason for that is I want there to be no question as to accuracy. And that is why I put everything on the chart and I post a picture. So I'm not just putting up numbers that are then deleted. By the way, I delete nothing ever. I don't care if I'm wrong from time to time because I know it's only from time to time. So it does not bother me. I leave everything up. Okay, dividend calendar. So what's coming up here soon? So I'm going to stay tight. No, let's just look. Cube and Progressive first. Cube. We're on a monthly. What do I like and dislike here? Sorry, guys. I got to talk through this stuff or I can get it wrong, just like anybody else. You start rushing and not paying attention to what you're doing. I'll tell you what. We're actually going to end here. I am going to do the upcoming dividend stocks because we have X pay date on the 1st, the 3rd, and the 5th coming up. So I'm going to do those tomorrow morning. And we'll keep this at about 28 minutes. So listen, everybody, I hope you enjoyed that. I hope that helped. If you have any questions, please reach out. Let me put up this is the way to contact me. Please do so. All right. If you have questions, please do so. I would love to. Why am I not showing up here? There we go. And now we hide you. And there we go. So if you have any questions, please reach out. You can email me. You go onto my site. You can text me. Here's my Twitter handle at DerekMe752-63605. My LinkedIn is LinkedIn and it's honest-trader. Feel free to reach out. I would really, really like to talk with you if you're having any problems. Remember, guys, if you're having a problem today, if you're not okay up here, you're not okay anywhere. Get out there, smile, fake it till you make it, baby. Do something you enjoy. Get in the sun, right? Go for a walk. I know it sounds hokey. It helps. Do whatever you have to do to reprogram that mind for today. You will solve today's problem. I promise you. Do you know how I know? You've never failed. Do you know how I know that? Because you're here watching me, which means you've never failed yet. And I don't anticipate you're going to. So remember, you will solve these problems. Remember, guys, every day above ground is a great day. I will see you tomorrow, and we'll discuss those upcoming dividends. Good morning, everybody, and welcome to this episode of Derek Invests. I'm your host, Derek Miller. What we're going to do today, there's a lot of opportunity in futures. Okay, there's a lot of opportunity in options as well. I prefer futures over options. Everybody is different. But what I can tell you is the reason I prefer futures is because futures flow just like the stock market does at a much higher speed and with a lot more leverage. Now, what that means to most people when they hear it is that they can make a lot more money faster, right? That's accurate. And it's also accurate that you can lose a lot more money than you even have. So when it comes to futures, the most important thing is that A, you understand the flow of the stock market. If you look at the stock market on a daily basis and you're not sure where it's going or where it's heading or what's going on, futures are not for you yet. And that's why I'm going to do this. This is going to be a free lesson in how you look at different levels, how you look at volume, and we're going to do it in a very slow speed because a monthly chart and a 1 minute chart are exactly the same. They will have the same flow. One will have it much quicker, one will have it much slower. You have to learn slow, right? I never met a baby who jumped up and started sprinting across the living room. First, he wobbled and held on to things. Then he crawled and then eventually got to his feet. And then it was 1 step and 2 steps. And if you think you can rush into investing and trading, whether it's just the stock market or whether it's the futures market, by just wind sprinting, you're just giving your money away. It's free. So, lesson. I want you all to remember something. I have a very firm opinion that every single person that is going to try to trade or invest their own money should first do one-on-one sessions with someone, learn and set up their own parameters, their personal parameters. How much risk can they take? What time frame should they be working in? And what investments should they be working in? I'm putting this out there for educational purposes because you should know how this stuff works. But if you haven't done that with someone, if you think, wow, that's too much, I'm not going to pay someone that much to teach me. Well, I assure you, you're going to pay a lot more than that in losses. You have to do that, plain and simple. But let's learn a little bit about this. Let's learn about some levels in the futures market because it's faster, right? You're still reading the same stuff, but it's quicker. So I'm going to jump over. We're not going to look at futures. I'm not even going to let you watch all those ticks and how quickly it moves and how quickly I reposition and how I adjust my risk. That's just confusing. Let's start off with where you should start. And I don't care if you're an experienced trader or investor revisiting this stuff. I revisit it daily. All right, let's start. Let's start with what good habits should you have. Now, there's a couple different futures that you could trade, right? You could trade in different markets. What I think is best for someone starting out is the Dow E-mini. Why? It costs a point. That's why. So $5 every time there's a tick, right? In either direction. If you're buying and it goes up, you made $5. If you're buying and it goes down, you lose $5. All right. If you go over to the S&P 500, now you're talking about $50 a tick. All right. So it's a lot more money. It's a lot more risk. You have to stay a lot tighter and you have a lot more money, and you should not be starting there. You should be starting with the Dow. So let's take a look. This is a monthly chart. Now, I don't care if it's a monthly chart or a daily chart or a minute chart or a 5-minute chart or whatever, and I'm going to break down from those places, but I don't care which one of those it is. You're going to have the same flows, okay? Now, let me show you what I mean by that. So we look in the background here. We're trying to figure out, is what's going on right now a big deal? So this is a monthly chart. So what this is going to tell us is if we're experiencing some sort of economic event, okay? This is back in 2008, 2009. This was the trading activity that was necessary to create an economic event. We had volume at this level, okay? And you could see the levels previous to it. Boom, 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 boom. All right. This was average volume back here before anything had really kicked off. So this was your average volume. Probably still is your average volume. Trading View, try any of their plans free for 30 days. $12.95 a month, $24.95 a month, or $49.95 a month. Let's just throw that out there because Trading View, I love their software. I'm not logged in, and because I like to trade futures through NinjaTrader, just my preference for now at least. Okay, but I like to give them a shout out because they do have fantastic software. I'm using it right now in front of you. So what we want to look at is what's going on now. Do we have an economic event going on now? Well, trading activity is the greatest way to know when you have an actual economic event. That is how those of us in the know were well aware in 2020 that it was not the event it was told it was going to be. Because if you look, the smartest people in the world weren't scared. They weren't selling everything. It was just the news that got retail, the average investor, the average trader scared. And you can see it right there. I mean, 2020, as far as trading volume, isn't much higher than January of 22, which this was a lot of selling. So they were both just a tremendous amount of selling. But in 2020, there was a tremendous amount of buying by guys like me as well. In January of 22, that was not the case. We were selling while retail just thought we were on a traditional dip. In December of 2021, during the holiday season, trading activity kicked up to about 500%. So we knew right here that we were heading into a correction or bear market. All right, so let's look at now. Is there anything to be fearful of now in the long term? No, there's not. Is it important to know that? Yes, it is, because believe me, when you're playing tick by tick, minute by minute, you are going to scare yourself. You're going to start seeing that 1-minute chart like it is it's a world event instead of what it really is, which is a very small move. All right. You'll start viewing it that way. So you need to get this stuff into your head. Do we have a major event going on right now? Is all of your money going to disappear? No. Let's go down to a weekly chart. And this, again, is very, very important for the same exact reason. Actually, let's go back to that monthly one more time. I want to show you something on levels. So when you'll hear someone who trades futures, people that trade options, anybody who's active, when you hear them talking, they're always going to talk about levels, okay? And you'll see that I'll show it to you over and over on this chart. So whenever you have, let's go back. Let's go here. Okay. Whenever you have a breakout, so a breakout from a to a new high, you should retest that. So let's just start making some lines. Okay. This is a breakout. It comes back to retest. This is another breakout. It comes back to retest. Now, breakouts that are bad are breakouts that are not retested. This is a breakout. It effectively is retested. This is a breakout. Now, what you're going to say to yourself is, well, here it's retested. Okay, fair enough. This tiny breakout is retested, but look at what has happened to the volume on that retest. You have gone from an average volume of, let's just eyeball it. Everything is notional, folks. We don't need to know the exact numbers. This is your average volume during the breakout. Your volume has now spiked on the retest to here. Okay, that's double or triple. This is not a retest. This is the beginning of a massive bear market. If anyone tells you that they couldn't see the bear market coming, and let me tell you when you really should have seen it, you really should have seen it right here. This is even a giveaway. It was actually a giveaway in May of 07. It just was. But if you move forward and you were the most conservative guy in the world, August of 07 was definitely a dead giveaway. All right. But, you know, nobody saw it coming, right? Only a wizard saw that coming. No. So here we have all these levels retested, right? Now, what else happens? When a price level, this was a retest, right? When the price level drops, if it's going to be a real bear market, it's going to drop, retest, drop, retest, drop, retest. It didn't. It just kept plummeting. Why? Because the financiers knew they could take advantage of retail. They knew they were afraid enough. Now, is there in fact a retest, everybody? There sure is. It's right here. How long did it take? This is October of 08. That's October of 09. It took an entire year. And guess what? It came up and retested, pulled back down, took off. Retest. Look. That's a new high. We're going to fade up. That's a new high. I guess you could say this one. That's a new high. So on your way up, break to a new high, retest, 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 break to a new high. There's no retest. Keeps going. Guess what? Retest, break to a new high, and it's going to go on and on. Now look at this. This was a new high, wasn't it? And guess what? It didn't retest, but guess what? Yes, it did. These are the levels we're talking about, guys. Now, I'm doing this on a monthly chart. This is not an effort to make you understand how retesting occurs. This is more or less an effort to simply show you how levels work, okay? We're showing you how volume and levels work very, very rapidly. This is a new high. Has it been retested? You could argue yes, you could argue no. It's really close. We're not zoomed in, guys. We are on a monthly chart. Ton of volume back here. Ton of trading activity. Here's the trading activity of 2020. Here's the trading activity of January of 22. We're nowhere near it. Is there anything to fear? No. Okay, we're going to log that in our minds. On a monthly chart, we don't have any major fear. It doesn't look like we've retested. So we're going to zoom in a little bit and check that level. And we're also going to check volume. Okay, you need to check volume and levels. Now, here's the high. As you zoom in, the picture becomes clearer. Okay, broke out, almost a retest. That's a new high. That's a retest. So if you were right now looking at this, you're going to say to yourself, I mean, this is a great distance, guys. This is from 375-ish to 369. 6 points. That's a big difference. All right. So you're looking at it right now. You're saying, okay, I'm looking for downside in what's going on right now. So what we want to look volume at high watermarks next. Because if there's a ton of volume at these high water, you definitely want to come down and retest this level, which is the previous high. And just so you know, traditionally, you're not just going to stop at the actual high itself. You're probably coming into here. That's reality. And that's probably, if you're looking at this on a weekly basis, that's what you're looking at. And we see a big spot, like a big piece of volume here, and it happens at a high price, right? And look what happened to price afterwards. See, I don't care if the bar is green or red. That means nothing. If you're sitting up there at a new high and you see an outrageous amount of volume on a weekly chart, now is your path. And this was not a small move down. Everybody remembers this. It took a year. You went from 370 down to 285 on the Dow. This is a big move. Huge, as a matter of fact, especially if you were in futures. If you got that wrong, you were toast. Let's move into a daily chart. All right. What do we see here? All right. Well, we see a high price. We see that high price revisited. And upon revisiting the high price, okay, we don't see high volume. But what we do see is a lot of really low volume. I would say the average here, notional, everybody. What do you think? Is that the average volume? I would say it is. It's probably the average volume right there. Here's the highs right here. It's below average the entire time. When does it pick up? Oh, looks like we're in a buy the dip mentality there. Now it's rallying back up. Okay. So what do we see here? Well, nothing to write home about. We're definitely, what levels are we watching though? This is important to notate, everybody. What levels are we watching right now? We're going to watch this high level here. This is important. We're also, and remember, we're very long term right now. If I go on to futures, you have to do this in seconds. You have to do this very fast. This is where you're at right now. That's the game right now, okay? The game is in through here. And then there's little miniature games going on, right? So we rallied up here, all right? But did we retest? Did we retest the previous breakout? Now we did. Now we rallied back up here to a new high. Did we retest this level? We are right now. Now we're rallying to a new high. Did we retest the level? We are right now. You see, there's miniature games the entire time too. And as you get better, you'll be able to break that down. Right now we're on a daily chart. Let's go to a 4-hour. And here we go. So there's something else that you always want to look at when you look at this stuff, and that is gaps, right? You always want to pay attention to gaps, especially on indexes. I'm just zooming in just a little bit so you can have a clear picture. So where's the game being played at the moment? Well, the game right now being played is this rally back up to this high. That's really what we want to see. And so our first point of contention is really, well, we've sort of met it. We've sort of met the first point of contention, I guess. But some heavy points to break through are going to be here and here. Those are really heavy points to break through. This is a rally up. We come back down because we're retesting. Now we come up. Now we should come back down into this area. We're in a sticky point here. So this will be a point to notate. This is a point where there should be a bounce. Okay. There should be a bounce there. And there should be a bounce there. And remember, we're just looking at a 4-hour chart. We're nowhere near evaluating futures at the moment. We're just saying, hey, this is where we should see some bounces on the Dow because we're evaluating this chart in short term. Then we come down and we look at volume. Is there any volume to speak about? No, it actually looks like volume is decreasing. So here's a low, rally to a high price, volume dropped, right? Right now, we're operating well below average in volume. Why? What was back here, right? So you kind of want to know the stories of what was back here too. So this entire area here, where is it? From May to June. May to June. This is a bunch of corporate buyback programs. Might not be the exact date. It was up to June 14th. It ended. So it's right in here somewhere. And that's where most of that volume came from. If you're not familiar with corporate buybacks, you should get familiar, because they create artificial demand and they create artificial price increases, because the companies that own their stock, they are buying that stock back, which drives up the bid, drives up the price. And when that dries up, what happens? Well, that dried up on June 14th. Goldman Sachs said that was approximately 5.5 billion in daily volume. So that's important to notate. All right, so we're going to zoom in a little bit more. All right, we're getting back into that area. Remember where we said the first sticky point was? Right here? We should come into here. So if you were trading right now and you're on a 1 hour chart and that's your time frame, and by the way, if you're not sure what your time frame should be, again, that is because you haven't done the due diligence of paying attention to your cash management, risk management, investment management. Are you even trading or investing in the right investments? Do you have enough cash available? Are you taking too much risk or too little risk? These are the things you have to know before you get involved. All right, let's cruise down. We're going to start breaking it down here. So we know what we're looking for now, right? Here's a gap, it filled. Here's a gap, it filled. Do we have any gaps here? Doesn't look like it. Look all right here, right? We went to a new high, retesting. Probably breaks down into this area of 390. It's quite a bit of ways, folks. That's quite a bit away. That's far from our price. I love it when I stutter over my own words. So here we are again. And so should we be buying and selling on this thing right now? Well, right now we're too far out. If we're looking at futures, right now we're too far out. But how do we evaluate it? Well, there was a lot of volume sitting right here, which drove price up. There wasn't any volume at this high. What this shows you down here, this lack of volume down here, what this shows you is a lack of demand at that price. No one wanted it. Now, as price started falling here, it started picking up steam. And that's what that high volume is. Now, as you're getting it down here, where are we? We're back at those low volume levels. Why? Because we're dipping into the previous high. Okay? That's why. Let's go down to a 5-minute chart. All right, now things are starting to make sense. Here's a big, heavy range for you, okay? This is a big, heavy range. This is where that price had taken off, if you remember. This is the volume that started pushing down. There's a lot of downward pressure on price right now. A lot of downward pressure. We're on a 3-minute chart. You can see how much pressure this applied. Look, no one is stepping in to stop price yet. No one is stepping in. So price should continue to push down. Now you're on a 1-minute chart. Look at that gap. Gaps fill, folks. If you would have seen this gap, what would you have done? You'd have waited for it to fill and then pull back down. Then it would retest the level it broke out from. That's right here. And ever since, it's pushing down, down, down. Is there any volume here to stop this down move? At the moment, no. There's no volume to stop the down movement. You are still in your trade. But if you were an experienced trader, what you're going to do, if you're short right now, as you should be, you're going to set this level. I'm going to put that at a 2 just so you can see it. You're going to set the level right there. And right here, you're getting out of your short. You're closing your short out. And right here, you're getting back into a short. Remember, you don't always have to have open. You just don't. All right. So don't feel position open. Right now, you can sit. Where can this run to, everybody? Let's go back and look. Let's go back to a 15-minute chart. Where can this run to? Well, it could run all the pressure until probably here. So you have to realize when you're looking at a 15-minute chart, you're really looking at big moves, especially in futures. But you'd be looking there. Let's make that a little thinner. You'd be looking there. You'd be looking there. you'd be looking there. Now, if it broke out to the downside of all three of these, and by the way, you should be covered by then. You should cover right here. If you're still short, you should cover right here. Right? That's your move. Otherwise, if it rallies to here, you should cover again. And then you go short again here. And then you would not cover again until you came back down here. That should make some sense to you, I think, at this point. How long have we been going? About 23 minutes. Now, let's clear those. And who wants to go over and see a little futures trading? What would you actually do? Let's just go over to a little demo account and let's take a look at what you would actually do so you can see it in real time. Oh, wait, I have to go back here. Stop the share. Sorry. I got to jump back over here so I can share the right screen with you. I was about to discuss a screen you can't see. Let's see here. Let's jump back over. Which one is it? I got this one here. All right, here we go. So as you see, I just walked away from it because why not? And it's I have two positions. They were bought in at 39,609. You would never actually do that in real life, folks. You'd walk away, but I'm willing to. It's fine with me. As you can see, I set this up the same way we just discussed. I didn't expect it to break through, so I had purchases at 39,609. This is the Dow E-mini. Now, where do I have my sells placed? Well, they're now at a high. They're at a watermark that's a bit too high. Okay, so what we want to do, let's zoom out a little bit so you can see. Zoom out a little more so you can. All right, now we'll zoom in. So as you see, these were going to be my old covers, right? So they get erased now. Why? Well, because price broke through to a level that I didn't expect to happen. But am I doubling down on positions? Am I panicking? Am I freaking out? No, not at all. Where's our next point here? So what you're going to do at this level is you're going to get out. So you'll set one to get out there. And how many positions do you have open? Come up here and take a look. 2 positions open. It's only $5 at a time, guys. So what are you going to do? You're going to come back to this exact same level. And you're going to sell out. That will close out these 2 positions. When price gets there, it'll close out these 2 positions. Now, what is the next trade you would make? Well, I mean, what you're looking at is a ton of sell pressure. We don't see a lot of buy pressure. Let's move over to a 5-minute chart. This is the actual mini. Now you're gonna. I've been doing this for a very actually this calm when I trade. Am I this calm no matter what I'm trading? I am. I always am. Okay, this for me. I have been doing this long enough. This is not a scary scenario. All right, let me just back this up so I can show you where I set those levels. You can do them. So here we have our levels down here, right? This is where we are going to close out those positions, right? That'll close out these 2 buys because it seems now that we might be in more of a sell scenario. There's a lot of sell pressure. So where are we going to go short again? Well, where did we break out? We broke out here, but actually the breakout's kind of right here. These are searches for supply to rally higher. That rally did not work out, all right? So this is actually your breakout. If you're going to go short again, you're going to go short here. How many positions you want to go short with? 1 or 2? Right now, because this would be a $50,000 account, I like to do 2 positions at a time, right? It's just where my risk is comfortable. Now, let me tell you something. That sounds like too little to you. That's not enough. Well, I can very, very easily do $2,000 a day off a $50,000 account with 2 positions. All right. And I can walk away from it. So I don't have to sit here and stress all day over what's going on. I mean, I just made those trades on a 5-minute chart. Would it be wise to zoom into a 1-minute chart? If you want to play it that close, because let's show you how close you can play it. All you need is your breakouts, right? So right here's your level, which, by the way, is where I put those 2 trades. Really, that's your trade right now. That's all you're interested in. And you just sit and wait. Well, Derek, what if you're wrong? So you have 2 buy orders open. Where does it have to fall before you say, I am wrong? Well, it would have to fall for me to say I'm wrong with the way I operate, for me to say I'm wrong. I would need to go. I'm close to 1 point. I can tell you that. One of those is going to get I could get stopped out. I'm really close. I am really close. Hit it, but it possibly could. That's interesting. What a good question I've asked myself. The reality is you're probably looking at here as your buys, which is why I set my buy level there. To really be wrong, you're going to have to come through here. Now, is this a monstrous loss in a futures account? Well, think about it. If you have 2 contracts open, right, you're doing $10 a point. That's 100 points away. That's $1,000. It looks like I'm up. I reset my account daily. It looks like today I'm up about $26.50, right? So do you have $1,000 to lose? Yeah, I guess. I mean, would I ever let something go that far? I wouldn't. I mean, that's not me. That would make me very uncomfortable. Close out these 2 positions. Right now we're not there. I'd have to real sell pressure come in because right now I'm really comfortable where I'm sitting. For me, I'm fine. I like this, you know. The volume down here at the bottom on this long drawdown bar, that's not going to be selling. That's actually going to end up being buying. I didn't break that down as we sat here, but I want to make you sit here and stare at this. I want you to see what I'm talking about here. Let's go back to 1. As you can see, you'll see me zoom in, and then I'll go to a 5-minute because I can then zoom out and let you see it. I can zoom out pretty significantly, actually. There you go. Yeah, I'm real comfortable here. I'm very, very comfortable here. I have my level. I don't want to bore you sitting here watching it. I mean, this is a 5-minute, maybe a 1-minute slightly. As you can see, this is in fact, what day trading is. I mean, this is what you do. You find your levels and then you sit. And guys that are in there pushing buy and sell all day and they're just killing themselves. You don't have to do that if you know how to read. I don't really care much about where someone else has positions either. I mean, I can see it. I can see their positions without knowing where their positions are, especially now with all the trend following going on. You have all the there's a lot of CTAs out there now trading futures for other people. So those guys, they're all trend following. Levels are all kind of at the same places. It's not really difficult to see. Maybe what I'll do is, because I don't want to make you sit here and watch this. This is it. This is what you do, by the way. So now I just sit there and wait until those levels are hit. Right now, there's nowhere near a stop for me. We're just not any now. I imagine this is going to be a pretty big day for me. I'll probably finish up another $1,200-$1,300. This is an easy day for me to sit through. I usually won't trade this long. I really kept this going because I knew I was going to make this video and over here. Share now, but I hope that this was informative. I hope you liked it. I enjoy doing it. I enjoy showing you. If there's something that is not clear, about. I'm zooming in a little bit so you can see my face. If there's something that's not clear based on, ask me by all means. But the most important thing here is, as I'm showing you levels, as I'm showing you volume, this is all very personal stuff. If you have not gone through with someone and done some live trading with them where they can watch your reactions and watch what you think and kind of make adjustments, and you watch them through how much money you have, what you think you can bear losing, and then your reactions to that, because it's important someone to really what gives someone like her at this stuff. It gives me insight into where your mind really is. What's going to really make you eject? What's going to make you make emotional decisions that you shouldn't be making? So I hope this was good for you. Look, if you're not following me on Twitter, there is my handle. My LinkedIn is there as well. It's just LinkedIn. I'm honest-trader. I made that name I don't know how many millennia ago, and I'm not changing it. Some people make fun of it. Oh, honest, and they make fun, but that's a fact. That is exactly what I am. So there's my Twitter, there's my LinkedIn. I have Facebook and Instagram and all that stuff too. For those of you that are interested in one-on-ones, reach out to me. Ask me, tell me what you want to do. Let's see how I can help you. Let me see how I can help you get set up so that when you begin your life, whether it's investing, look, this is a way to hedge as well. This is a way to hedge very cheap. Look at what you're trading. It's $5 a point, everybody. If you think you're going into a nasty market, or there's indicators that you are, there's no reason to take market losses when you can cover at such an inexpensive price. This is a way to hedge. This is a way to make money. This is a way to take small accounts, turn them into big accounts. It's also a way to lose your ass if you don't know what you're doing. So keep that in mind. All right, thank you for joining me today, everybody. Listen, remember, if you're not good up here, you're not good anywhere. You cannot solve the problem, even be happy in today if this isn't right, okay? So make sure you're right. Make sure you're okay. If you're having a tough, you haven't failed up until now. How do I know that? Because you're still here. That's how I know. All right? Smile. Fake it till you make it. Get out there and see the sun, right? Go for a walk. Sounds so hokey and ridiculous, but believe me, these are the things that are going to make you smile every day. Put that smile on, all right? Every day above ground is a good day, and if you don't have somebody to talk to, you reach out to me. I'll talk to you. Thanks for tuning in, everybody. Morning, everybody. So, in an effort to keep the show exciting, and welcome to the latest episode of Derek Invests. I'm your host, Derek Miller, and in an effort to keep everything exciting for you, I'm always trying to look for topics that I think are really relevant. So short interest in the NASDAQ and the S&P is at financial crisis level lows, meaning that the optimism in the market is tremendous, okay? When short interest is low, it offers two things. So first, without short interest, markets tend to glide in an upward direction. Short interest, by the way, folks, if for some of you that don't know, is simply people believing that the market's going to fall. So they go short. They're looking for the market to fall. So what that tells you is that there is some pessimism that exists, and that pessimism will push prices down from time to time. But there's something even more important with short interest that isn't just about pessimism and prices dropping. Oftentimes, the strongest buying in a bull market is in fact short covering. Short covering is nothing more than the opposite of selling a stock. So when you go short, you're betting on a stock to go down. When you cover that position, you're eliminating that position, and that creates false buying, because in fact it is buying, and that helps markets keep moving up. Okay, so I saw that this morning. I saw the short interest on the S&P and the NASDAQ was at financial crisis level lows. That in itself isn't. I mean, it's something to take notice of, most certainly, because that means that everybody's on board. The market's doing great. Nobody wants to miss a thing. That is always a terrible sign for the stock market, as far as the ease of which things have been going along. And our bear markets are getting closer and closer. We had kind of like a flash crash in 2020, and then December of 21. The market fell, at least the NASDAQ fell about 35%, the S&P a little over 20. over the next through October of 22, right? So the next year, basically. And then we've been on a nice smooth run since then. So I saw that indicator and I thought, something you want to look at whenever you see short interest at these levels. Apologize, I had that a little too close. Something you want to look at when you see short interest at these levels is simple. You want to start looking at what are the insiders doing? So the people that are running these companies, what are they doing? Because that's really, really important. They are the ones more in the know than the average person. Okay. Now, I have been telling you that I believe that AI is not nearly as powerful as they're telling us it is, and that it is not ready to take over anything. It doesn't show so far that we're in any sort of 99 internet bubble, but Tesla was not in a bubble in 2021 either, yet it fell 75%. Optimism gets high sometimes, and way too high, and people they get overexcited. Okay, and when people get overexcited, what do? They buy. And when people buy, they send prices higher when they shouldn't, in fact, be going higher. You'll hear me clicking here. It's not for nothing, I assure you. I'm getting there. And so what I wanted to see was, well, what do the CEOs of these big companies think? How much of these big companies, as far as insider selling goes, is there, right? So is there a lot of insider selling? Now, why do we care if there's a lot of insider selling? Well, it can mean a couple things, insider selling. Everybody will always write insider selling off as they're bailing, right? They know something we don't know. But there is a trend that I have personally seen going on lately that makes no sense to me. And I'll tell you what it is right now. The trend that I've seen going on that makes no sense to me, AI, is the fact that if you just attach your name to AI, your stock is skyrocketing. That doesn't make any sense. Simply because you've now said, we're involved in AI, you're back. I'll give you a good example of that. It's Meta. Right? All we heard about from Meta was that the new metaverse, right? That was going to be their big deal. That was what Zuckerberg was kind of leaning the company towards, and he was investing all this money into Meta. Well, that has obviously gone nowhere. Now, all of a sudden, he announces that he's going into AI, and the stock market the stock just skyrockets along with the stock market in AI. And that makes no sense, everybody. You shouldn't just say, hey, we're going into AI, and then it takes off. Now, why has that happened? Well, I'll tell you why. For the same reason that it's happening right now with Tesla. Oh, well, I'm opening an AI company. I can tell you right now, from a personal standpoint, I have seen the power of AI in Airbnb, and it's a disaster, an absolute disaster. I wouldn't want, for the life of me, and I'm not kidding you, I wouldn't want for the life of me to have my customer service run by AI. It is terrible. It cannot understand what's going on. I'm telling you, it can't understand what's going on. It has taken almost 4,000 of my family and I's dollars after putting us through hell for 2 weeks. I'll never, ever use Airbnb again. That company will be in big trouble because it is going to continue to allow the mistakes. And they don't view it as a mistake. It's AI. No. I'm not going to get into the specifics of what happened, but I'll just give you a brief overview. Bottom line was they messed up our booking. They then needed to give us our money back. They couldn't give us our money back for 2 weeks, but that's not fair because they messed up our booking, so we needed a place to go. So they sent us this coupon, and this coupon was in the amount of our money plus a little bit more for hassle, right? They applied it. We're going on a 6-month stay. They applied it to the end of our stay instead of the beginning of our stay. So I still had to come up with the money. So I basically, to move into a place with Airbnb, and this is just the first month's rent, mind you, instead of coming up with what I agreed to, which was about $3,000, I had to come up with $6,000. And then they said they'll give me my money back in 6 months. And this AI that is working for Airbnb can't see the problem with that. It still doesn't see the problem with that. We had to take a break this week. We've been fighting them for 6 weeks. We had to take a break this week because of it. I don't believe AI is where they say it is. Now, so back to what I'm going to cover in this week's episode. And I know I'm 7 minutes in, but we're going to cover all the stocks listed below. And here's what I'm going to tell you. I'm going to tell you what these companies are, what they do, how much insider selling has taken place, and then the number one insider seller. So let's start with the first one. And the reason we're going to do this is we're then going to jump onto the charts and we're going to do some rapid evaluation of, okay, all this insider selling is taking place. There's no short interest that can really hinder a bull market, everybody. Not that we're looking for a bear market, but we keep our eyes out. We're always paying attention, right? We're always paying attention to the factors that can affect us. The corporate buyback program ended a week ago on June 14th. So we lost $5.5 billion in corporate buybacks. That is buying, everybody. Short interest is effectively non-existent. So we're not going to have the effects of short covering, which pop stocks. Now we have large insider selling to boot. This is not good, especially if it's the CEO who's doing a lot of the selling, because he has the greatest insight into what he thinks the future of his price is. And he can be taking profits just like everybody else. I'm not knocking these people for doing what they're doing. He is allowed to take profits. Most of his income, most of the money he makes comes from running that company. And so therefore, to make the money, he has to sell the stock. And sometimes he has to sell them regardless because he's on an options program. Options expire. So he has to sell them. So you'll have to take all this with a grain of salt, but it's important to note that the corporate buyback program has ended, which that is in fact false buying, false demand, along with false buying. That's $5.5 billion in flows per day, according to Goldman Sachs. Short interest is an all-time low at levels seen only before the fall of the financial crisis in 2008. And now corporate buybacks are extremely high. Let's get started. So we have Altair Engineering. The biggest seller is, in fact, the CEO, Ralph Scappa. He has sold about $56 million in stock. They are software and cloud-based simulation, high performance, and AI computing. Their CEO sold $56 million in 2024, and they're attached to AI. Okay, this is part of the AI story that I have been telling. I don't believe it's at where we're told it's at. I do not. I think it's amazing. I love ChatGPT. Google is a complete waste of time. I love it for research. I love it to find things. There's certain things that AI I love. They are not ready to take over the world. I'm not letting it drive my car. I don't want to get McDonald's food from them. They can't even handle basic customer service. A person would have solved the issue I described to you at Airbnb inside of 5 minutes. AI, I'm on 6 weeks. I think they're going to try to steal my money. I'm just being honest. And that's my experience. Okay. Neurocrine Biosciences. I'm giving you the top 12 stocks with insider trading this year, and let's see what they do. Neurocrine Biosciences, biggest insider seller, Kevin Charles Gorman. He's the CEO. About $62 million that he sold, which that's wow. Neurocrine Biosciences. We're going to look at that stock as well. Develops markets for pharmaceuticals, neurological, neuroendocrine, and neuropsychiatric disorders. We might be coming to the end of the Adderall stage here. I don't even know if they're connected to Adderall. I'm making that up. But obviously, something's going on. Then we have Sprouts Farmers Markets. I think I know what's going on there. So what was their biggest insider seller at Sprouts? Jack Sinclair, the CEO, about $14 million. That's big. That's big insider for Sprouts. They're focused on fresh and organic foods. Why? Well, competition has gone through the roof in fresh and organic foods, and you also have guys like Bill Gates coming out with Appeal, and these companies can't keep this crap off their labels. And if it's not organic food, and right now Sprouts does sell whatever that Appeal label is, and there's a ton of controversy about it, I wouldn't want it on my food. I don't put that kind of crap in my body. And if it's not organic, I can't imagine why you'd be going to Sprouts any longer. So maybe that's why. We're going to look at the stock. Then we have Dell Technologies. It's Michael Dell, and it's like it's a big amount. It's almost $1 billion. Yeah, $900 million in 2024. Again, he attached himself to AI. All of a sudden, it took off. Is Dell and AI really that simpatico? I don't know. But Michael Dell, that's number 4. Number 5, Adobe. We already know what that is. Shanatu Narayan, amount sold not specified. It's a ton. C3.ai, obviously it's AI related. Thomas C. Seibel. He's a CEO. He didn't tell specifically how much. Most of these are not specific at this point, but they're just the insider selling is extremely high. So then you have CrowdStrike, that's AI driven. Then you have Moderna. Moderna can't be sued for the junk that it injected in a lot of people because it completely gets away with it, right? But once people start to realize or just start to accept the fact that it caused more harm than good, and it did, Moderna's in trouble. I don't even know how they survive it, right? Pfizer as well. I don't even know how they survive it. For those of you that got the jab, they got that, and you believed in it, great. I hope you continue to believe in it, but there are tons of diseases coming out with young people that have never existed before. I mean, myocarditis is up thousands and thousands of percent in age groups that it never existed. And it all follows one event. Now, I'm not going to get into all of that. That is up for you. That's for you to decide. I look at stocks. I look at markets. I can tell you right now, people are starting to realize what was in that crap. It wasn't good. And it certainly wasn't a vaccine that we'd ever seen throughout history. There was definitely lying there. mRNA is not a vaccine in the way you're used to it. When you get your measles and mumps vaccine, there's a little bit of measles and mumps in the vaccine, and that's what protects you for getting measles and mumps or whatever you're getting. There's a little bit in there. mRNA does not work that way. It just doesn't. And so even using the term vaccine was a lie. So that it had me right away with that. But they're going to be in trouble. That is why they are inside. That's why the insider selling is so high. It's the CEO. All these are CEO guys. Palantir, that's attached to AI. Pinterest, that's interesting. We know what Pinterest is. Roku, Anthony Wood, they try to attach themselves to AI too. Tesla, he's going to have the self-driving cabs, and he started an AI company. And it's really because Tesla has been hammered so badly, I think. But that's for you to decide. Look, I am just sharing with you the companies that have the highest levels of insider selling. So let's go take a look at them. All right. So first, let me share my screen with you. We'll go to Altier first. Coming over. I'm going to start. I have not heard from. Let's come on over. I've not heard from TradingView at all. So I'm going to start reaching out to some other charting software companies and seeing if they'd be interested in sponsoring a show that uses their software on a daily basis. If you work for TradingView, I'd love it for it to be you. If not, please reach out. I have had one company reach out to me this week, which is exciting for me because I love doing this, but this isn't just for joy, everybody. Okay, Altier, what's it look like, everyone? Let's go into a weekly. Monthly's not enough data. Oh, mama. Look at that. What do you think that is? And that is not me being facetious, guys. This right here is something that I can show you that existed back in 2007 and 2008 that everybody ignored. Does it mean it drops tomorrow? No. The first time I saw something like this was in late 07. Prices dropped in the S&P, and that was on the index of the S&P, by the way, not a company. Prices dropped through August of 2022, about 20% before you had that crash in September of 22, August of 08. And prices did not, that crashed into occur till September, but we were down 22% from late 07 into August 08 before that occurred, and it looked exactly like this. I assure you, you ignore volume like that, you ignore trading activity like that, you are a fool. Let's zoom in. Okay, very, very bad. Continue to zoom in. It's bad. I don't care what that is. That's bad. Oh, goodness gracious. Let's just keep coming down. I mean, folks, this is at the high price. This level of you got to get out of it. Run for cover. Yeah, this is terrible. Got to get out of here. Where's it going? Let's pick a target. Oh, God. I mean, at that volume, I kid you not. Oh, goodness. Let's zoom in on this volume. That's on a daily. Let's zoom in on that last day. This is a catastrophe. How is that possible? My goodness. Okay. You have to sell this. The initial target will be here. It should blow through that really easily. Your next target's here. I mean, ultimately, this thing's hammered. Ultimately, here. I mean, my goodness. We will set this. Let's make this just a touch smaller. Let's set this for target 628 for you don't understand. This can hold off and it can happen really, really fast. It is all dependent upon who tries to hold this up. This trading activity is not, oh my God. This is a monster. Okay. I mean, that can be the stock collapsing. It can be. That could be the end of this company. When you see things like that, it was just, it's very similar, ALTR. That's, yeah. Put that there. Why do I say you don't know those targets? Because it depends how quick it picks up speed. I kid you not, when I could do an entire show on what I'm looking at right here. This is wild. Wow. No one's talking about it. All right, that's our first one with insider selling. And that is unbelievable. That's unbelievable. That volume is that of 07 and 08. There's no exaggeration to that. That is exactly what it looked like. Let's go to the next company. NBIX, Neurocrine Biosciences. Now, the interesting thing about the biotech industry is that it has received more startup funding in 2024 than any other industry. Let's take a look. As you see, there's nothing here that looks like that Altair. I mean, you rarely see a position like that. Rarely, rarely, rarely. Now, as you look at this, does it look like selling? I mean, right now, there is definitely some high volume here at the highs. Is it anything to jump at? No, not exactly. That Altair, I was talking yesterday about, you look for positions that you have a lot of confidence in. Oh my gosh, you could stake your life on that one. Those are the positions you look for. It's filling gaps on the downside. There's nothing here worth looking at. And in fact, with all of the startup activity in the biotech area, you don't really want to fight. Look, one thing you don't fight in this world, folks, aside from a bull market, which I always say that, don't fight bulls. That's a ridiculous notion. But the other thing you don't fight is money. And there is a ton of money pouring into the biotech industry. Let's look at Sprouts Farmers Markets. Where are we at? Weekly, let's go. Okay, see this volume right here at, what is this? The high price of 74, low price of 64. You announced it at 77. See that volume bar right there? When you look back, these volume bars led you from 40 to 70. They're about the same size. See them? So that is definitely something you want to pay attention to. Let's zoom in a little bit. Four hours. What do we got? This is a gap up. It's filling. That's good. There's a gap here that needs filled. There's a gap here that needs filled. This is high volume. You don't have high volume at the high, though, which would indicate a lot of selling. Yeah, there's nothing here. There's, again, nothing here to write home about. Nothing here that you're going to say this is going to happen, that's going to happen. It's going to happen relatively quickly. I can give directions on this stuff over the long term. For those of you that are just looking to miss bear markets and average 20% a year, I mean, every one of these charts tells you something. But right now, I told you I'll have a little bit more of a focus on the short term. It seems like people are really, really interested in that at the moment. I would say this is probably your price level on Sprouts Farmers Markets right now, which is like 75.50. It looks like you have a good bit of selling here. It looks like you have a good bit of selling here. Reasonable selling there, nothing crazy. That's probably your reality, but I'm not even going to post that. I'm going to stop posting things unless I see something that I really, really believe is a problem or is exciting, either way. I don't swing at every stock, and I'm putting up stocks mainly because I want people to tune in and watch what I'm doing because I'm very good at what I'm doing. You see this? So this volume down here at 80, you're now sitting at 1. It basically was up here at 160. See that volume there? Now look at this volume. That's at the highs, everybody. This is a weekly chart. Let's zoom into the Dell daily chart. Highs. This is all at the highs. Gap filled. This is coming down to at least 90. What are we going to do over the next week? Well, let me zoom in. I'll tell you. But we're coming down to $90 on Dell. This is just about filled. It could pop back up here first, by the way. I doubt it, though. That's very doubtful that will happen. It is possible, though. It's absolutely possible. 1 hour. Yeah, see, this is where you start to get hazy. And this is why short-term, guys, is so difficult. This is a ton of selling, right? Every chart's a new chart. This is a ton of selling, but it's also a significant amount of buying. It took you from 128 to 148. But at 148, you have a bunch of selling. And what people want to know nowadays, they don't care what's going to happen in the next, 6 months, which for this particular company is going to be a $90 mark. They want to know what's going to happen now. It's going to happen in the next week. All right, so we popped up here. This is a lot of selling. This is a little bit of buying, but it popped it, right? It popped it. A lot of selling, little buying. So in the next week, you're at 134. I would say give it it's summertime. You got to say 2 weeks, I think. Yeah. It's summer, man. Summer. There's such a lack of volume in summer that you can. And ordinarily, if this were fall, we would absolutely be at 135 in a week. But we're going to go 135. We're going to go Dell 135. We're going to say 628. What's 2 weeks? Because we got July 4th coming up. I mean, it gets so slow. Everything moves at a glacial pace in the summer, and you have to recognize that fact. Seasonality matters. So you're going to say by the 5th? Yeah, I guess so. Why not? There we go. Yeah, but ultimately, and I'm going to go back and show that too. Ultimately, if you owned this stock, you would get out of it because your risk reward is awful here. I'm actually going to zoom out. I'm going to give a longer term opinion because $90 is certainly where this thing's going. I mean, let me tell you something. It could happen fast too. It's summertime, but the world has changed. Futures and options are up. You know, the use of futures and options is up thousands of percent in the last decade. That can absolutely speed things up. You have AI doing a ton of trading. That can slow things down and kind of moderate up moves, but it's going to create big, fast down moves because right now AI appears to be nothing more than trend following software. It piles on to the stuff that's making moves, and it piles on heavy. With that, it's going to create smooth up moves, but it should create some pretty powerful down moves. Pretty powerful. Michael Dell just sold off almost $1 billion in Dell this year. We have short interest at lows of the financial crisis of 2008, which can create artificial buying when shorts cover. Let's say target date. We're on a daily chart, guys. Got to go out 6 months. So you'll just say what? You got to say December of this year. It shouldn't take that long, but it could. Most definitely could. So you have a lack of short interest, which means there's a lack of covering that's going to occur. You also have the corporate buyback program that ended a week ago, which offered $5.5 billion in flows. These are not fantastic signs. And you just have to acknowledge them. And right now, every hedging strategy is cheap, whether you're looking at options, futures. I don't know how you hedge, whether you short, you can buy inverse ETFs, which there's literally nobody is buying inverse ETFs right now. Another telltale sign, by the way. Okay, so let's go back. What is our next company, everybody? Dell. We'll look at Adobe. I'm going to pick up the speed here a little bit. I don't want you guys getting bored, but I want to show you what I'm looking at because so far Dell and Altair are just, oh my goodness. Okay, let's take a look. So a lot of guys, oh, look, there's a double top in Adobe. It matters, but more importantly, you want to look at trading activity. There's not a ton of trading activity here, but Adobe just flew, right? I mean, here you are in 2019, you're sitting at 250. It's at 680, 690. I mean, give me a break. If you're not selling that, you're out of your mind. But again, this speaks to this computer-based trading. I know everybody's telling you that it's going to be the greatest thing. I'm just telling you what I see, and what I see is trend following software. And trend following software is going to bite you. All right, so the next 6 months, you're looking at 460 on Adobe. We definitely have the volume to pull that off. There's definitely selling in the background. Let's zoom in. Okay, here you go. This should be buying, right? But if this were buying right here, guess what would have happened to price? Not buying. Okay. Up here at the high price, you have buying. We're on a 1 hour. Let's see if this holds up through the 30-minute. Immense selling there. Good out of the 15-minute. Oh, man. And then you have a complete lack of demand up here at the high. I have not logged into TradingView. But, hey, you guys get a great commercial every time I do this. So on your 5-minute chart, what's going to happen? Obviously, it's selling. What's your first target? My goodness. In the next week, what's your next target? You should have a little sticky here. You should get stuck right there. This should be your next weekly target. So you're looking at Adobe, probably let's say 523 ADBE. And what I'm doing right now, by the way, folks, is something I tell you never to do, because you don't want to fight bull markets. It's not a genius idea, but the fact of the matter is this stuff looks weak. I'm going to go ahead and say 6/28, 2024. But you are fighting the market, which leaves you at high levels of risk, right? And you have to know that. Oh, let's put target date here. I actually want to write that so people know target date. And then we're doing this on up here. Let's do it up there. I'll do a separate one. What is it? 6/22, 2024. There we go. Put you right here. Stack it up all pretty. Target date. There we go. Let's save that. And then I'm going to give you a longer term date here, because this has a bigger fall coming than that. This definitely has a bigger fall coming. So I'm gonna get you out a little further here, so that someone goes, oh, he said it was only going to go to 523, and here we sit way down at. I'm going to fill in the blank in 1 second. Yeah, this thing should be at 4. You should be at 4 call 470. 2 months. So we'll say Adobe ADBE. Okay. ADBE. We'll say 470. 70. We'll say, well, today let's put our date. 6/22, 2024. Then we have a target date. Target date of for 6/22. We'll just say February 1st. It should be there before that, but let's just run with that for now. There you go. It's Adobe. Let me see where we're at on time, folks. See how quickly I need to pick it up. I want to get through all 12 of these, because I have found two that that definitely speak to what I have been telling you. So let's go ahead and take a look. Let's where are we at on time? Yeah, we're at 36 minutes. I'm going to pick up the pace just a little bit here. I love to kind of explain what I'm doing. But the fact is, I'll never get through it all at this speed. The real reason I want to explain what I'm doing is because I'm here to teach you. I want you to learn this stuff. I don't want you just to follow. So let's go ahead and look at C3 AI, which had massive insider trading. Again, corporate buyback programs dried up, which was 5.5 billion in buy volume. That's right up about a week ago. Short interest at the lowest levels since the financial crisis, which means we're not going to have any short covering, folks. Short covering is false demand. And oftentimes that's a much bigger driver of the stock market than people actually purchasing. Is there anything here worth looking at? No, I'm not even going to comment on this. Yeah, it just, who cares? There's nothing there that you're going to get excited or scared of. Crowd, we're gonna look for a couple here that might have something that you care about, something you really want to get out of the way of, or you really want to be involved in. Let's take a look. Crowd, what do we got? Oh, mama. Massive volume at a high price. Volume as big as volume that took this stock 10 to 380, almost 400 inside of what? We're not quite at 2 years here. About 18 months. But that is the low. So let's be honest and let's be fair about this. But this looks like it's something you want to bail from, everybody. Massive inside selling as well. Let's take a look at this. This is buy volume, or supposed buy volume. That's a daily chart. That's actually a really, really, really nice day. I can't lie to you. See how when you zoom in, your focus changes. But you have to keep zooming in, because I looked at 1 day. Let's look at where the volume was in that 1 day, right? Because that's what you want to know. Okay, on a 4-hour chart, you get a couple big 4-hour bars there. You got a monster here. What did these do? 1, 2. That's definitely selling. That's definitely selling. Let's go into a 1. This is buying. This is buying. How do you know? Well, pop price up. That's how you know. If price goes up, everybody, after a lot of trading activity, that's buying. There's no way to deny that. Price went nowhere after this amount of trading activity. This is a monster here, and price has gone nowhere. What happened there? That looks like buying as well. Let's zoom in a little bit, though. Just remember, all your volume can come in, all your trading activity can come in a 5-minute period, which completely is deceptive of what really went on. Now, what really went on Friday? What really went on was a lot of buying. That's a lot of trading activity, guys. That is a lot. Woo. Woo. I mean, the short term, this thing has to hit 388. I would say by next week. So let's go ahead and put that up. But it's going to have it's ultimately a down move. There's no doubt about it. So let's just call it 387. And we're going to change this all to blue now, right? That's buying, not selling. Now, COD, crowd. And what did we say? We're going to look at, call it 387. That 2024. I'm actually going to give distance on this target. This date 6/28/2024. Let's move this over. Okay. Funny, I never realized how hyper-focused people get on the next few days. And I'll tell you why. If you're in the futures and you're using a lot of leverage, yeah, you can make a lot of money. Same with options. But I'll tell you what, if you don't know how to play the turns or how to identify a turn coming, which is real tough to do looking at short-term charts like this, you're never going to make any real money. You're just going to get eaten up. And that's a fact. All right. And then the next level, guys, is probably right there. So we're going to call it 355.50. And now we got to change the color back, don't we? So yep, let's change it back to red, because that is not going to be good. I promise you. And that's the funny thing about charting, or it's not even charting, guys. This is literally just the language that the market's written in. It's funny when I say charting or people say technical or whatever. You're looking at cash flow. In what business is looking at the cash flow going in and out of something negative? Hey, it's the silliest thing. You sit there and talk about fundamentals all day, and I'm not telling you not to pay attention to fundamentals. Everybody knows how I utilize fundamentals. I love them. I'm telling you about the buyback programs right now. The fact that 5.5 billion in daily volume, which was attributed to buyback programs, according to Goldman Sachs, just ended. I'm telling you that short interest is so low; it's at levels of the financial crisis. I am not someone that does not talk about fundamentals, but okay, let's see. We're on a 30-minute chart. Guys, you're on a 30-minute chart. You got to look out a month. You got to look out a month at least. So we're going to say 7/22, 2000. And it's funny because markets falling in the summertime is a bad bet, guys. It's a bad bet. But I have to tell you that I can't. I mean, this can go another way. But the fact of the matter is, if you know what you're doing and you're playing things a long term, and for me personally, half of everything I do is always long term, just due to taxes alone. Half of everything I do is long term. So I'm always looking long term. And then half of what I do is typically short term. And there's a reason for that, because you can make a lot of money using a lot of leverage in short term products. But if you're not conscious of the tax consequence, sometimes, especially in a market that's kind of it's really gone sideways since about March, April. And if you're not aware of that fact and you're playing this, look at that. Moderna, what's their symbol? mRNA. They named the technology after the company's stock symbol, for God's sakes. Daily, anything? I mean, me personally, I shouldn't even look at companies like this, because when you have a feeling about something, or whether negative or positive, you really shouldn't be involved. But there's nothing here worth noting anyway. Well, yeah, there is. This is selling up here. Let's see if it gives you any targets on the downside. I have to be careful because I am always going to look at this company to the downside. It's just personal bias. So I have to really watch when I evaluate it. Like, see, now this looks like volume. This cluster down here looks like buying in the short term. It does. And like, for me, I have to watch that bias of saying, hey, it's going to fall, because I don't like the business itself. However, I would say this is a toss-up. If somebody made me pick, I would say 138 in 2 weeks, 138 by the 5th of July. But I'm not going to go anywhere with this, because I don't think this one really even looks, it just doesn't look, it's nothing worth talking about. Palantir, monthly. Let's go down to the weekly. That's a lot of volume to the buy side, everybody. That pushed you from 1580 to 24.6. Here's that same big gap. But listen, it's not. So just keep. What you're looking for there, guys, you're looking for stuff that's in play. You don't want to just because of insider selling, or it has a lot of insider buying, or it has a monstrous corporate buyback program. This is information that doesn't mean all that much. It's things that if you're not taking note of, you're a fool. But okay, see, it has that same market structure. All the NASDAQ stuff has this market structure, which leads you to believe that there's a swift pullback coming. So I hope that you're hedging. Hedging is really cheap right now. IG, low spreads, fast execution. Learn more. Looks like it's 4x. Pinterest. Let's go to Roku. ROKU. Let's go to a monthly. It's funny that stuff like that exists. That's market sentiment, everybody. This is just people getting overly excited. That's all it is. Now you get down here at the low. See all this right here on a weekly chart? If someone asked me, I would tell you that was buying. Because when you look at a chart like this with this monster behind it, you can't tell that this is 100% fluctuations. It looks very small. Watch what happens when we zoom in. Because if you're looking there, you're saying, oh, they're buying down here at these levels. These levels are small. But look at this. This is on a daily chart. You've gone from 48 to 110. That's a 300% moves. That's why it's so important to scale out, to come out, and then look back. And just like here, if you saw this volume here, you would say, hey, this is after a market drop. This must be buying. But there's no way it's buying if price went from 75 to 50. There's no way. It's selling. It's further selling. People got caught off guard. They got caught with their pants down, and they had to hit the sell trigger late. Now, what does all this look like? Anything? You got big selling in the background. Somewhere like up here on the 30-minute charts. Every chart, what's it look like now? I would say this looks like buying now. Into a 15-minute chart. We are starting to get into those areas that people are interested in. But look at all this buying. This is a lot of buying down here at 52. You're sitting at 54. That's a % run from 30. Company doesn't look good. It doesn't look good. Once you see some monstrous trading activity, that is our final company that had tons of insider selling. For all you Tesla lovers telling me how it was going to change the world, that's why you were buying it at 400. How's it feel down here at 183? How'd it feel down here at 100? That's not why you buy stocks. Okay, this is a lot of buying down here that pumped you way up, obviously, right? Then it brought it way down. We're going to have to zoom in a little bit more. Is there anything down here you're excited about? No, the one thing I see on the daily charts right here, and not only does it not excite me, it scares me. That's a lot of volume, the highest volume bar on this daily chart. And it is at a high price of 198. Price has done nothing but fall since there. E-Trade, 0% commissions, 0 compromises. Other fees do apply. I like doing that. Hopefully I'm doing that a lot more soon enough. Okay, so this is an interesting bar. So is this. Is there anything here in Tesla that you should be aware of? No, we're not interested in Tesla at the moment. It's just not interesting. All right, everybody. So let's stop that share. That right there look how the lighting has changed. How beautiful. That right there was our conversation on the market in general. So those were the top 12 companies that had the highest insider trading in the market right now. All of it was sold by the CEOs. Some of the biggest that were noted was Michael Dell, obviously, of $1 billion. Most of that stuff was attached to AI, folks. Market sentiment in AI is monstrous. You can't argue that. Now, we went through and we tried to evaluate if there was a bubble in the tech industry led by AI. Well, what we found was the PE ratio of the leading stock, which is NVIDIA, was 82, 83, right? Which is high. It's high. It's certainly not the 1,000 that we saw of Amazon back in 99, right? In the tech market, there's not all these companies that are literally non-revenue producing junk with like the top 10 stocks leading. So is the tech market in a bubble? I would not say that the tech market is a bubble. I mean, we looked at it. It clearly was not. However, is AI at a high level of sentiment that can lead to large declines in price? Yes, I would say this is probably further proof of that, how high market sentiment is. We learned that the corporate buyback programs, which Goldman Sachs stated had $5.5 billion in daily buying volume. That ended on the 14th of June. We know that short interest, which creates short covering, which creates artificial demand in stock markets, is at its lowest level since the financial crisis of 2008. So that can be a hindrance to buying. We have large insider selling. And as you can see, charts are very gappy with the big companies. So there is downside involved. But as you saw, some of those companies look like they're going to go up. Some look like they're going to go down. I think the chart of the day was certainly, was it Palantir? Was that monster chart that was, absolutely horrific? No, it wasn't. Which one was it? Hold on. Which company was that, guys? It was no. It was Altair, right? ALTR. Oh, God, it was. ALTR. Okay. So Altair, that's definitely the stock of the day, everybody, and to the downside for certain. Not over just the short term, over the intermediate term, and over the long term. That is monstrous. It could get turned around if some big buyers step in, but whoa. All right, so that's the show for today. Remember, mental health is everything, guys. If you're not good up here, you can't be good anywhere else. If you're having a tough day, trust me, I know that because you've never failed until now. How do I know that? Because you're still here. You're still watching the show. Sometimes it's hard to get out of those funks. Fake it till you make it. Throw on a fake smile, and be happy until you really are happy. Get out in the sun, exercise, do something beautiful. Look, every day above ground is a great day, okay? If you have any questions for me, if you're looking to get involved in my VIP mentorship program, which is primarily one-on-ones, but I do a couple live webinar series throughout the year. We work off of the three pillars of any proper investment and trading plan, which is risk management, cash management, and investment management. What does that mean? You're managing risk properly, you're managing your cash properly, and you're choosing the proper investments. When you have those in sync with your personality specifically, that is when you have the real chances of ultimate success in trading. All right, thank you all so much for tuning in. I hope you enjoy this. And look, go through and watch all those charts. I'll see you soon. Well, I'll tell you what, I'll see you.